We are expecting more than 200 people today. In previous conferences, my attendees would really be from 100 to 120. With the virtual, I'm actually surprised we had more than 200. I said, where all these people come from? So if we had known that you guys prefer virtual, and I would have done the virtual training a long time ago, right? Instead of trying to squeeze you all in one small conference room. But this is great. There are some limitations of being virtual. I mean, personally, I prefer it to be live in person because I like to walk around the room and kind of call out folks and tease them a little bit. It helps with the energy, but there's only so much things you can do to keep up the energy virtually, right? So I'm gonna need your help to keep that up. We're gonna go through a few house rules before we start, okay? Hold on. I'm trying to wait for to reach 200 at least. So, is Mary Lee in the audience yet? I'm not Mary Lee. Mary Keipp. I'm gonna start picking up people already.
Yeah, I'm here.
There she is.
Yeah, you can start picking on me, Catherine. I'm here.
Just checking. We're at 181 now. I want to reach at least 200 before we officially start. I did say 9 o'clock, but my plan is to start the training officially at 9:15. I just want to make sure people are settled in. So they don't miss anything.
I think those of us, are you going to give us extra points if we were here on time, Catherine?
You're going to have to ask Edwin that, who's the auditor.
Okay, no, Edwin, no findings for those people that were here on time. Okay.
I have to check on its allowability, Mary. You know.
We do have we're actually keeping track of who's logging in, because as you know, this training is mandatory for fiscal officers and fiscal staff. So I do appreciate the program folks who are here, right? So I will check the attendance later, and then I will get back to you, Mary. But
okay,
I did make a note that you are here early.
Yes, I was here, yeah,
as you promised.
9 o'clock.
And then the second session in the afternoon will be on budget preparation. I understand we have some non-EWDD folks, but maybe this might be helpful for you too, to see if your budget preparation or negotiation process is something that you need to tweak a little bit, or maybe you're doing it better than we are, right? And then I will see if I have time to start on cost allocation this afternoon. Depends on how many questions we will get on the budget preparation. I know there's a lot of questions that are brewing up over that topic. But if I have time, I might start on cost allocation a little bit already, but definitely I will not finish it. Okay. And if I don't finish it, then we will continue for day 2 for cost allocation. And then I will switch to financial reporting. Those are the financial reports that EWDD requires. And again, I think this might be helpful for those non-EWDD folks as well, because you can kind of see what we require from our service providers. Hopefully you'll find something that will be useful for you there. And then, of course, Mary's favorite topic, the afternoon of day 2, is we will talk about our fiscal monitoring review process, the audit resolution process, and what we can do to kind of work together to hopefully resolve them rather than being disallowed. I think that will be a hot topic as well. Any questions so far? I would like to introduce my team. Okay, my awesome FMD team. I think all FMD, we have a similar virtual backgrounds. That way you can kind of spot who or where we are. Except for me, that virtual background that I picked did not work for me. So, I don't have that same background, but they would have FMD right next to their name. So Kathy's our admin person. If you have any admin needs, she's the one you need to reach out to. Keipp is our host, our main host, and our technical coordinator. So if you're having problems with connection, access, all that technical stuff, please reach out to Keipp. Glenn is our logistics and equipment. Rovi, our senior accountant, and Steve, they're our coordinators. If there's anything you need at all about handouts, the schedule and all that, please reach out to them. Edwin will be my co-trainer, the expert in audit and uniform guidance. So hopefully, if you guys have any questions I'm going to need help with, he's going to jump in with me. And of course, I'd like you to meet, as you may have heard, I am retiring. I did delay my retirement to be able to do this virtual conference for you, but I do have a successor already, and that's Rose Tang. Rose, can you say something?
Good morning, everybody. It's very nice to seeing you all today. And I'm Rose Tang. I'm the new Director of Financial Management Division at EWDD. Again, very nice to see you all today.
So there you go, guys. Rose is going to be the next FMD director. She's kind of on training mode right now, but I wanted to make sure that you meet her because you'll be dealing with her 2 weeks from now. Okay. And then, of course, yours truly, I will be conducting the training for the 2 days together with my team. Just a few housekeeping rules. Make sure your profile shows at least your first name and your organization name. So when I pick on you, I know which agency you belong to. This one, we're okay here, Keipp, right? Okay. FMD team, again, reminder, put FMD right next to your name so people know you. Our schedule, if you notice in your handouts, I did not set a time on how long each topic would be because I'm just going to gauge how much time we need and then I'll adjust along the way. Okay, but I will try to end on time, but we'll see. We will have 15-minute breaks except for this morning. Okay, this morning we are going straight up to 11 o'clock. Only because for today we are going to have a long lunch break. The EWDD staff, we are required to attend an all-staff meeting from 11 to 12:30, so we do need to log off to attend that. And then we will resume and let everybody in before 12:45. So, and that's why we don't have a morning break for today. Tomorrow, I will give you an hour lunch break. I plan to end at 4:30. Depending on your questions, I hope, you can stay until 5 if necessary. Those who have attended my trainings before, they know I send them home on time. So we'll see for today. Again, the sessions will be recorded. Want you guys to be aware of that because some people don't like to have themselves recorded, but I do want to see your cameras on though, if you don't mind. I see your beautiful faces. I might not see you again, right? So if you don't mind at all, I prefer that I can actually see you so I have a face with the name. The handouts, again, they were provided to you yesterday. I know we sent them around 3:30, so people may not have been in the office anymore, but we did provide the Google Drive link and the chat if you guys missed it. We will go through each handout because for every handout, I know there's like hundreds of pages sometimes. I did create bookmarks within the PDF document just to help you navigate through all the pages. And we will have 2 break rooms just in case you want to hang out. Among yourselves. We have 2 break rooms for the workforce folks and the economic development. If you want to just hang out and say hi to everybody. Okay, nothing going on there except for you guys to just have a place to go to if you guys want to talk among yourselves. Isn't that great? I mean, if it's live, we really couldn't do that, right? So I thought that was an awesome feature. Questions. And there is a reason that I didn't do this as a webinar because I do like to see participation. I like to hear interaction from you folks. And I think for webinars, I couldn't do that. So if you have a question, you could do it through chat or raise your hand. Okay. They know how to do that, right? How do they do that? Anyway, you can raise your hand and then FMD folks are kind of monitoring everybody so that they know if somebody has a question. During the training, we will mute everybody. See, that's why we mute everybody. Right? Just to make sure, we don't have that background noise, but you can. See, Keipp just muted me. What part of what I said did you miss? What was the last thing I said? Huh? So Keipp has the power to mute everybody. I mean, just in case we hear a lot of background noise, but you can individually unmute yourselves if you have any questions. I welcome questions, okay? And I do want to hear or see reactions. So I think you can do emojis here. Can you? Right? So if you do want to send me a thumbs up or, a heart or whatever, please do that. Or even just unmute yourselves. And if I say something funny, unmute and then laugh. How's that? Right? See, I see you laughing, but I can't hear you. There you go, Jackie. That's how I want it. Okay. I do want to hear that. I mean,
I got you, Catherine.
Yeah,
I got you.
that's what I miss about the live sessions. I can't hear that. It's kind of weird. I'm sure for those of you who have conducted meetings, it's kind of weird when you're making a joke and then it's silence, right? So it took a while for me to get used to that because I'm so used to the live interaction. But this is why it's a meeting and not a webinar. Oh, and we have gift cards for everybody. So we will find a way, because we can keep track of your scores. I think before I would give the highest scorers a gift card, but I don't think we can keep track of that on so it's just going to have to be a raffle. We'll find a way to do that. So you guys come home with at least, a Starbucks or Amazon or a Visa gift card. That's not an allowable cost. So it's going to have to be an FMD, what do you call that? A donation. Because I cannot charge at the grant, just so you know. That's an example of not an allowable cost. And then please just be courteous and respectful to everybody. It is a big group right now. I see 200 people already. So it's the biggest number that I've had. So I'm hoping we're going to be able to manage this big number smoothly if we're courteous and respectful to each other. Okay, only positive vibes here, people. Okay. Thumbs up.
Going out with the bang, Catherine.
Yes.
So if people want to do reactions or thumbs up, question marks, raise your hand. There's on the bottom of your screen, there should be something that says reactions. For those of you who don't know, click on that and you could, it would appear on my screen that I'm laughing, I'm crying, whatever.
There you go. Thank you.
Or you can just celebrate. I'm not going to celebrate Catherine retiring, so that I'm going to do, I don't know, there's no sad face. So those are the ones that you can do. So make sure that you can use those buttons of reactions.
So use those, okay, folks? It's going to help me talk for the full day. So help me out a little bit. Use those. And then we will take group pictures at the end. Cameras on, everybody. Okay? I want group pictures. Give me a souvenir before I retire. Do we have a deal? Yeah?
Deal.
So with that, let us start with the serious stuff, okay? Bear with me on uniform regulations. I know this can be boring when we're talking about rules and laws, but that's the foundation. Once we get into the regulations, then we go to the application. What do you do with your budget? What do you do with your cost allocation? How do you comply with the financial reporting requirements? And then at the end, how do you avoid Edwin's findings? The audit findings, okay? So that's the flow of the conference, and that's why we start first on the uniform guidance. It's going to be boring, so I hope I'm able to keep the energy a little bit, but what we're gonna start with, okay, let me just switch, okay? So uniform guidance, okay? And the uniform guidance needs to be updated every 5 years. So there have been updates in 2017, and the latest ones were in November 2020. Instead of confusing you of going back and forth of what it used to be and what it is now, the slides you will see are the updated version, what it is today. Okay? Do you like my graphics? How's that? Was that cool? Okay. So the contents of this session, we are going to have an overview of the uniform guidance. And then we're going to go through the different subparts of the regulation, subparts A through F. Some of them, especially the general provisions and the pre-federal award, subpart C, I will quickly go over that one. But there will be certain parts where I will actually spend a little bit more time, especially in sections under Subpart D, post-federal, because that's when you actually have the award, the federal award, okay? And then Subpart F, I will skip that because I will cover that tomorrow during our audit section. I'm not going to go through the appendices, but you do have them as handouts. If you look at your handouts, if you notice, I have some bookmarks on the side. I don't know if you can do that for every versions of the Acrobat, but I do have bookmarks on the side. If you notice, your slide is 129 pages. So I figure that you're going to need that to go through from subpart to subpart. Okay? With that being said, let's start. Overview and structure. Hey, that's our picture from our last conference in September 2019. Do you see yourselves? Yeah. That was it at the Goodwill Center. That was a very successful one. Let's see if we can top that one virtually. So 2 CFR 200, what is that? CFR, that's a Code of Federal Regulations. There's a delay time, right? Because sometimes I think I'm going too far ahead of what they can see. So I'm going to try to be conscious of that. CFR is the codification of the general and permanent rules published in the Federal Register by the departments and agencies of the federal government. Remember, federal at the highest level. The uniform guidance is called the Uniform Admin Requirements, Cost Principles, and Audit Requirements for Federal Awards. So when we're saying UG, Uniform Guidance, that's the complete name of the guidance. The structure, it's so overwhelming to go through the CFR, so I want to make sure you know how to find what you need. In the Code of Federal Regulations, there are actually 50 titles. Each title would represent an area subject to federal regulation, okay? I just kind of listed here what some of the titles are that we might be interested in. Where do you think is the title for CDBG? You think will be there. So every time you hear 24 CFR, it's a HUD regulation. Okay. Those who receive CARES Act from the Treasury, you will know that it's a 10 CFR. That means Treasury guidelines. Where do you think WIOA is?
29.
29. You think it's kind of obvious that you will see WIOA there, but that's where you kind of see the other labor-related areas, and WIOA is actually here. Okay, so you see 20 CFR, that means we are talking about WIOA. Don't ask me why it's not in 29. But I think it talks about employment over there, but WIOA is actually the workforce training programs, I think. Okay, but just keep in mind that WIOA is in Title 20. And that's where we're going. Title 2, grants and agreements. Okay, your handouts wouldn't have the squares and all this animation, and then that's intentional. So I'm hoping you guys are taking notes there. I just do it for emphasis, but it's going to make the handouts too messy if I print them out as well. So you're not going to see the animation in your handouts. So the structure, continuation of the structure. Under Title 2, remember, we're going to Title 2. There are 2 subtitles, Subtitle A and Subtitle B. Under Subtitle A, there are 2 chapters. Chapter 1, which has parts 2 to 199. And there's Chapter 2 for the OMB guidance. And this part has parts 200 to 299. That 200 that I encircled there, that's the uniform guidance. That's where we're going. Okay, it's that tiny, tiny part 200 and all the 51 titles of the CFR. That's what we're going to be going through in the next 2 hours or so. And the uniform guidance has subparts 200 to 521. And then Subtitle B, Chapter 1 is where you will kind of see a separate chapter for each federal agency related to Title 2. So for example, 2900, I think, is for Department of Labor. That's where Department of Labor is saying, okay, we agree with everything that's said in the uniform guidance, except for this. So if you have a grant from HUD, CARES, Education, Justice, I suggest you go to Subtitle B and find your federal agency just to see what requirements they have decided to adopt as part of the uniform guidance, or if there's anything that they changed. Okay, if I were talking to WIOA subcontractors, I would be going into the WIOA chapter, but because we have a mix of different grantees, I won't do that in this conference. Okay. The CFR citation, that's the format. Title number, the word, the acronym CFR, part, dot, subpart. So if you see Uniform Guidance 2 CFR 200-521, you need to know where to. So that 2 right there stands for title. It means Title 2. Okay. That 200 right here means what? Man, if I were in a room, I would hear mumbles of answers, but okay. I'm gonna imagine that you guys are mumbling the answer. 200 means part 200, okay? And that 521 right there means what? The subpart. That's how you find it. Okay. Remember I mentioned subtitle B. Like I said, it's divided into chapters. Chapter 24 is for HUD. So Jackie would be interested in chapter 24 because it's all HUD regulations.
Yep.
Chapter 29 is for Department of Labor. And I know we have CARES Act folks here. So chapter 31 is for all US Treasury guidelines. The Code of Federal Regulations, I'm not going to click on the links. I don't want to lose my PowerPoint, but that's where you go. And that's where you will see all the titles, the chapters and the parts, everything's there. That's the wonderful world of the Google University. You don't even have to have the link, but ecfr.gov is where you will find the Code of Federal Regulations. Pay attention, okay? If you see should, it means it's a best practice or recommended approach. If you see must, then it's mandatory. You absolutely have to do what's being said in the Code of Federal Regulations. And in fact, as we go through the regulations, when I see must, you will probably see me encircling it or putting a square because I want you guys to know that it's mandatory. It's required. There's no way around it. Okay. The types of entities, so you guys know who you are, where you are in the federal world. Non-federal entity, which I would call NFE, meaning you're not a federal agency. That's basically what it means. Pass-through entity, or PTE, is when that federal award passes through another entity to get to you. Okay, so for example, for RIOA, it's a Department of Labor award, but we get the grant from the state of California. In that case, state of California is our pass-through entity. The city gets the CDBG grant directly from HUD. Okay, so in that case, there is no pass-through entity. Okay. So that means the grant is being awarded to a subrecipient through a subaward. Recipient, it just means you're getting it directly from the feds, no pass-through entity. A subrecipient is you're getting it as a subaward through a pass-through entity. You are not a contractor in this case, so you are subject to the regulations. Quiz, okay? Quiz number 1. So I'll give you 2 minutes. How's that? I can actually see you guys answering. Isn't that cool?
Catherine, I can't see the quiz.
What, Mary? What?
I mean, I see the picture, but what's the question?
Okay, but for those who cannot see, we will go through them.
Oh, okay.
Yeah.
Yeah, I can't see the quiz either, Catherine.
What? There are people answering, actually. So those who cannot see?
Oh, I can.
Tight. How's that?
Standard.
Yeah, people are participating. You guys didn't update your browser, maybe? We'll give them time, okay? Are you guys using your phones to attend the conference? Maybe? Okay.
No.
It's okay. We'll do it together. Because I do want to pick on Mary. So,
Go ahead and pick on Mary.
yeah.
Hey, you can pick on me. I'm tough.
Yes, you are, Mary.
This is why we love you, Mary.
Back at you.
Okay, let's end it and then we go through the questions. Okay, that's 2 minutes. Okay, let's start. Let's show the first one. This is probably basic for some of you, but you'd be surprised how many still miss some. So select the federal awarding agency.
To U.S. Department.
The answer is, why do I see LA County and the state of California? The federal awarding agency would be Department of Labor and HUD, or Treasury in this example. Okay, meaning you're a federal government. Mary got that right. So those who answered city, state of California, LA County, wrong. Okay, next question.
Hold on.
Oh, I have to scroll down. Oh my God. Thank you, Kayo. Select the recipients. Low income investment fund and state of California and the city of LA. Did you guys get that right?
Mhm.
So a recipient meaning you got the grant directly from the feds. So state of California got one directly from the labor.
Uh-huh.
City of LA got one directly from labor.
Mhm.
And low income investment fund straight to the recipient from the federal agency. Okay.
Mhm.
So some are still confused. Select the pass-through entity. So the pass-through entities are state of California, LA County, and city of LA. Okay, I see managed career solutions and El Proyecto. Okay, those of you who are picking the wrong answer, make sure you review the definitions, okay? You need to know who you are in that tier of federal government and how low it gets into the tier. You need to know who you are. Number 4, select the non-federal entities. So the non-federal entities are everybody in this picture who's not labor and treasury. Yeah. And then last one, select the subrecipient. The subrecipients are state of California. No. State of California is a recipient. So the subrecipient will be LA County, city of LA. All the yellow boxes are the nonprofit. A low income investment is both a subrecipient and a recipient. Okay. All right. Okay,
Yes.
guys, that's our first quiz. Let's move on.
Somebody did ask a question.
Oh, somebody has a question. Kenneth Smith has a question.
How can you be
Let me
direct?
unmute. I was just, I think you answered it at the very end, but I was like, how can you be a direct recipient and also a pass-through recipient? How is the city of Los Angeles both?
The city of Los Angeles is a pass-through entity because the grant that we got directly from the Department of Labor, so follow the arrow, we gave those to managed career solutions and low income. So that made us a pass-through entity, meaning managed career solutions and low income did not get the grant directly from labor. It passed through the city of LA. Okay, and the city of LA also is a recipient because we got a grant directly from labor. There's a straight arrow from labor down to us. That made us a recipient. Okay, did I answer your question, Kenneth?
Yes.
Yes, okay.
I have a question, Catherine.
Uh-huh.
How is LA County a recipient? They didn't get one directly from labor.
No, LA County, did I say LA County is a recipient? Because it's not. It's not. Yeah, so LA County, he in this case is a subrecipient and a pass-through entity. Okay, so if I said that they were a recipient, no, that's wrong. LA County is not a recipient in this scenario. And it's important for you folks to know that because chances are, if you have a pass-through entity, when they apply those federal regulations, they will probably be more restrictive. You know, at the minimum, these pass-through entities will help to follow the uniform regulations, but because they're lower in that tier, chances are they will impose additional restrictions or requirements on you. Even if you know that it's a federal award, you have to know if you got it through a pass-through entity, okay? Any other questions on that? So now we go to Subpart A, acronyms and definitions. I think I'll probably go quickly through this one. But right here, I just gave you a list so you know that there's a place for you to go to if you don't understand what something stands for and who it is or what they are. Okay, but I will not go through each of them. So see, I highlighted NFE. Believe it or not, in the old regulations, Edwin and I beat them into the acronym NFE. We've been using that forever. So, but this time they've added it into the regulation. You will actually see the acronym NFE. And you will now see PTE. I think in the very first training that I did for uniform regulations, I used those acronyms already. So Catherine Bondoc here was ahead of on acronyms. Laugh, and then mute. Okay. And then definitions, make a note of this. Allocation, we will go through that probably later today or tomorrow when we talk about cost allocation. Make a note of this. It is no longer known as CFDA. It is now called assistance listing. And why am I highlighting this? Because if you have CFDA still in your procedures or reports, it should be called assistance listing now. I think I'm guilty of that one. I think our policy is still saying CFDA, you know, or our single audit report still say CFDA, but I'll blame that on the controller. How's that? But yeah, make a note of that one. There's an assistance listing number instead of a CFDA number. It's now called assistance listing. Budget period is a new term. You know, I'm actually surprised. Why is that even a new term? It should have been from the get-go, right? But budget period is when you have an award, it may consist of multiple budget periods. So they wanted to differentiate a budget period, which is the portion of your award that is approved for funding, versus the life of your award, which may be longer. Okay, so that's why I say it's versus period of performance. Know the difference. When I say know the difference, you'll probably be tested later, okay? So please pay attention to those so you actually get the right answer. It feels good to get the right answer, you know, for a topic as boring as the regulations. Closeout, I'm just highlighting that for you. We all do that at the end of our city contracts or award. Cognizant agency for indirect cost. This is important, and you have to know who this is when we talk about indirect costs later on the cost allocation portion of our conference. Okay, it's the federal agency who's responsible for negotiating with you if you want to charge the government indirect costs through the use of an indirect cost rate. Okay, sometimes multiple agencies would assign, say you have a federal award from labor, HUD, and Health and Human Services. Sometimes they would assign one federal agency responsible for negotiating for all three grants. That federal agency who you be negotiating with is your cognizant agency for indirect costs. Contract, I'm highlighting it just so you know the difference between a contract and a subaward. A contract means that you are purchasing goods or services. Your contractor is just in the business of selling a service or selling goods. They are not a subrecipient, okay? And you need to know the difference, because sometimes I will hear, well, you know, I have this agency, but my contract with them is called city contract, and therefore it makes them a contractor. And I say, no, it doesn't matter what you call it. It's the relationship that you have that makes them a subrecipient. So it doesn't matter if you call it a contract or agreement, it's your relationship with that entity that defines whether they are a subrecipient or a contractor. Know the difference, because if they are a subrecipient, that means they are what? They are subject to the regulations. And then if they subcontract below them, those are subject to regulations. The regulations will go as deep, as far as where the federal funds go. So if you subcontract and then that subcontracts, those regulations will follow at the very bottom, okay? A contractor, on the other hand, is just selling you something, okay? They are not subject to that. And this we will talk about later. Many of you have been struggling with audit findings. Oh, I shouldn't call them audit findings, because if they are with EWDD, then they are fiscal monitoring findings. And the resolution process for that is something that we want to highlight tomorrow, the second part of our conference tomorrow. No questions so far? Everybody quiet? Okay. FMD, you're watching the attendees, right? So we know who's not paying attention. Okay. Corrective actions, we will go through that later, but there's actually a definition on that in the regulations. Cost allocation plan, cost objective. You would love this part of the training tomorrow, where we will actually go deep into what allocation plan you should have and all that good stuff, whether it's an intermediate cost objective or a final cost objective. And you will need to have things set up like that in order to comply with your financial reporting requirements. One of the findings that we have is for an agency reporting to us for something that should have been cost allocated and it wasn't. Okay. That's a big finding for many of you. So I want to dig deeper into that later on. Disallowed cost is something that many of you hate, only because it's so painful to actually have incurred something to support a program and for that to be disallowed, meaning you cannot charge the city or your grantor. So those can be painful. So it's something that you don't want to incur in your organization. Okay. Equipment, nothing new here. A life of 1 year or more with acquisition cost of 5,000, it's equipment. And you need to know the value of the equipment because those are subject to prior approval requirements. You may have to ask the city for approval, and the city may need approval from their pass-through entity, which is the okay. Your NFE might actually have a lower threshold of what they consider as equipment. They might say it's 4,000, but that's the call of the NFE. Federal Audit Clearinghouse, this is where you submit your single audit reports, okay? For those of you who are subject to it, this is where we go to find out if you've submitted it or not. Final cost objective, we will go through that tomorrow. Usually final cost objective is what are the final allocation of your different costs? Where do you need them to go so that you can then report your performance numbers or your financial numbers? So this is very important. Financial obligations, this is new, okay? In the old regulations, it used to be called just obligations. In the updated version of the regulation, it's now called financial obligation, meaning things that you have a purchase order for, you have a contract, you have an agreement. That means, as far as regulation is concerned, it's a financial obligation. You have a commitment to pay once that service is provided or once that product is delivered to you. You have a financial obligation. And you need to know that because most grant reports require grantees to not only report expenditures, but to also report what? Financial obligation. Improper payment, I will let you read this. Oh, there's a question. Go ahead. Who is it?
From Grace.
Grace?
For equipment in the per unit cost, does it include the sales tax and other missing fees like shipping or freight?
Edwin, for the equipment, it does include the freight charges, right? For that to be delivered, because that's the cost to you.
Yeah.
Yeah.
But that's a cost.
Is that Grace from Pace? Can you unmute, Grace?
I'm sorry. Yeah, this is Grace. So, are you saying that the item, the per unit, includes whatever the fees included to acquire that equipment?
Yeah, I think so. Is that Grace from Pace?
No, this is Grace from CSU Northridge.
Okay, sorry. Only because I was expecting Grace because I'm looking for Johnson. Johnson's supposed to be here and he's not. Okay.
Thank you.
Thank you. Oh, very good, Edwin. Edwin unmuted himself and then laughed.
Yeah. I'd like to see penalty for Johnson for not attending.
And this is what I like about the conference. I want it to be a casual vibe. I don't want us to be too formal because it's boring enough to be talking about regulations. I don't want us to be formal. Johnson said that he won't attend because he thinks I might pick on him or harass him or something. I don't do that, do I? I don't know.
Yeah, oh, please, Catherine. Yes, you do.
But in a good way. In a good way.
Yeah.
So anyway, that's why Johnson's not here, but I'm going to respond to that email later on.
Okay, tell Johnson he's a big wuss.
Oh, if Grace from Pace is here, please send the message to Johnson. Okay, so that's improper payment. That means it's a payment that you should not have made either by a mistake or whatever reason. So here's my question. Is a question cost an improper payment? Then, Mary.
It could be.
It could be. Very good. Safe answer. Okay, if it's a question cost, we're just questioning it. We're just questioning the allowability.
Yeah.
Until it's determined to be disallowed, then at that point, it becomes an improper payment.
Right.
Or something that you kind of just paid by mistake, right? Then it's called an improper payment. So it may not be necessarily an audit finding or a disallowed cost. Indirect, this is a lot of people's favorite topics. I will delay it until we actually get to that part of our training, but we will go through this. Don't worry. indirect cost rate proposal is something you submit to the feds or to your pass-through entities, meaning the state or us, if you want to charge indirect costs through a rate. That's what you call the indirect cost rate proposal. Changes on micro purchase procurement. And this is where I'm going to need our program folks. I will delay going into what the changes are because we actually have a section just on procurement to discuss changes. There's increase in the threshold, but there's certain conditions to it. And I don't think our procurement policy has been updated, but we'll address that later. I know Jackie's in the house. Is Gerardo here? Johnny, sorry.
Donnie's here.
I'm here.
We're going to go through the procurement standards. It's really our call as a pass-through entity to if we're going to adopt what's in the regulation or if we're going to be more restrictive. That's really our call. But I want our program folks to be aware of what those changes are and then make that decision if they haven't. Edwin and I did check the policy, at least for the workforce side of the house, if we updated our policy to reflect the changes, and it doesn't look like we did. So right now it's a topic for discussion, and I know Jackie, I will probably put her on the spot later, just to see where you guys are. But let's delay that until we get to the procurement standard section of our discussion. FMD, somebody remind me if we're getting closer to 11 o'clock, okay? Because we don't want to miss our meetings. Okay. So I'll skip those. Modified total direct costs. You will need to know this when we go to the indirect costs portion, because it's the basis for if you want to use the 10% de minimis rate for indirect costs. For those of you who don't want to be bothered negotiating with Edwin or the federal agency, you know what? I'm just gonna apply for a 10% de minimis rate. There are conditions to that, though. I mean, the federal regulations may say that we don't have to ask for documentation, but as far as the city is concerned, we might ask you for something. It's intended to minimize the burden on certain organizations where they don't have the resources maybe to negotiate for an indirect cost rate, and they may choose to use this, the 10% de minimis rate. If that's who you are, make sure you know what modified total direct cost is, because that's going to be your basis. The difference with using a 10% de minimis rate is it's not up to you to decide what your base is. The regulations actually telling you, okay, then this is going to have to be your base for the 10%. Okay, I'm just going through quickly. You all know what this is not new. The personally identifiable information. You guys need to protect, first names and last names and social security. Okay, those kinds of things that can directly link to a person. You need to have systems in place in your organization so that nobody would have access to it just because they want to see it. They have to be protected. Okay, if you have to have security for those electronic files, or I hope you're not emailing social security numbers to people, right? Because anybody can access your emails. You have to have something in place. If we see that, or at least your program monitor sees that when they visit you, it's a problem. Okay, you don't want your social security being accessible by anybody, right? So, but now it's in the regulation. It has always been. When it first came out, they actually put this in there. And then a question cost, we talked about this. We are just questioning, if this may have resulted from a violation of a rule or a condition or a term of the contract, or the cost does not seem to be reasonable, or I did not see adequate documentation. That's when you'll hear Edwin say, okay, I'm gonna,
Here's a question.
this is going to be a question cost for now. We have a question from
Margot.
Margot.
Do we still need that if we have less than 10%?
The question is, do we need it if we have indirect cost that's actually less than 10%? It's up to you. If you want to recover at least some of that, if I were that organization, I would apply for the 10% de minimis rate, because that's when you can at least recover some of it. The federal reg says we don't have to ask for documentation, but what we want to make sure is, okay, 10% de minimis rate, but show me what's in your indirect cost pool that you're going to charge 10% the city for. And why do we ask that? Anybody? We're not just trying to make, things difficult for you, but there's actually a reason on why we asked that, even if it's a 10% de minimis rate.
Because some of it might be administrative costs, in which case it has a lower cap on it. It has a 4% cap.
Yeah, Mary did her homework today.
All right.
Mary,
Hi, Mary. Oh, this way. I was high-fiving the box. I should be high-fiving here, right?
yeah, okay.
Mary is looking for a gift card.
Yeah, that's right.
And she's right, because the reason for that is some of that may be admin costs, that may be subject to a cap. The other reason is, and this is the big one too, is we want to make sure that you are not double dipping, double charging. Meaning, did you actually recover some of this indirect cost that you say you want to apply 10% de minimis to another federal award? Okay, that's the reason. You cannot charge 2 grants for the same thing, because then you're double dipping. Yeah. We will go through that at the procurement section. And here's remember when we talk about a contract, different from a subaward, meaning they're subject to the regulations. In this case, you will have a subrecipient. Know the difference for those two. Okay. Nothing new here. Unliquidated financial obligations. Used to be unliquidated obligations. It simply means we owe a service provider. Should know this by heart by now. Okay, because it's actually a required information in your financial reports. It's just the balance of your contract, okay, that you have not spent. So if you have a contract for 100,000, if you've spent 80,000 in expenditures, the 20,000 is your unliquidated financial obligation, not an expenditure yet, but you do have a contract that if that service or expenditure is incurred, you have the obligation to pay. Okay. Unobligated balance, easy, right? For most, this would be in your unearned grant, meaning you never used it. It's your total award minus what you did not have in contracts or you did not spend. And therefore, if you receive the cash for that, you have to send it back. Or if you've never received the payment for it, you just will never get it. Okay. This is something that you don't want to have because it's dollars that could have been spent to serve the purpose of the grant, the community, the population it's supposed to serve. If you never spent it, that means the service was never delivered. So this is something that we don't like to see. There's a question. Martha?
Hi, I'm just trying to understand the difference between the obligation balance and the liquidation balance. But I'm thinking the obligated balance is the budget to actual. So whatever's left over, that's the obligated balance, right? So
that means you have not made a payment. Or you have not received the service or the goods. And yet it's a financial obligation because once you receive that service, you have a contract that you need to pay. Did I confuse you more or?
That's what I'm thinking. So it's something that we might have to pay, but we haven't finished getting the services. Is that correct?
For that to be an obligation, you actually need to have a contract. There's a legally binding document that obligates you to pay once you receive that goods or the service. So that means what? You have a contract, you have a purchase order, or it could be the salaries of your employees who have actually worked, but you have not paid yet because you know how the payroll is always behind. That's what an obligation is. For some grantors, they can be really specific about what you need to report under obligation. Tomorrow, we actually have an exercise on this. Some people make the mistake, for example, in their report to the city, they would report their salaries budget for the year as part of their obligation. And why do they do that? Because they want to inflate to show the city, sometimes could be, that they have obligated a big percentage of their grant. Because that's what we want to see. We want to see that you are actually obligating it, right? And then you will eventually spend it. But remember, the salaries budget is really not an obligation. Why do you think that is? Martha, I'll pick on you.
You have to pay them no matter what, right?
You have to pay them only if they work. So for example, we've done the work for last pay period. Your cost for that is now considered an obligation when you report to us, but do not report the remaining part of your budget that has not been spent. Okay. And that can really inflate your obligations number because guess what? For most of us, our personal cost is really the biggest part of your budget. Okay.
Okay,
Um,
thank you.
Okay. This one is the last one in the definition section, and I'm highlighting it. Do some of you have a matching cost requirement in your contracts? For some federal award, for you to be competitive, they actually require in their solicitation of applications for that federal award that you actually match, meaning for every dollar that they give you, for example, that you match it by 50 cents. Okay, there are some grants who actually require that. For EWDD, we try to avoid that only because we're usually, we're about 95% grant funded, because matching means you have to pay for some cost from your own pockets, your own dollars, to match what the federal government has given you. In this portion of this subpart, they are saying if it's voluntary, meaning you were not required to begin with, but for whatever reason, let's say you thought that it's going to make you competitive. You volunteered to say, okay, Department of Education, for every dollar you award my organization, I will match it by 50 cents. You volunteered, okay? Not required, but you volunteered. Now, even if that's voluntary, once that becomes part of your grant agreement within this example, Department of Education, you are bounded by that. Okay, they will require you that you meet that because now it's a binding requirement, even if you volunteered in the first place. Okay, so if I were you, if you're gonna get the award anyway, I wouldn't volunteer for cost sharing, because that means paying for something for the program that you're not gonna be reimbursed for. Quiz 2. Okay, a short quiz, not too long, just 30 questions. No, it's
Just a few questions.
just a few questions. Okay. Oh, we have questions. Okay, go ahead.
CRCD.
CRCD.
It was just a comment, Tim.
Oh, okay.
I'm Lorraine from CRCD. I just wanted to say we do have some matching obligations on hard grants and AmeriCorps grants. We manage.
Okay, and those were required?
Yes, they're required. They're required.
Yeah, hi, Lorraine. Yes, so that means, for example, you do not meet that match requirement at the end of the grant agreement. They will only pay you for what you can match.
That's correct.
Yeah, those are difficult grants unless you actually have the non-federal funds to do that. In Celerine's case, it was actually a requirement in the application, Celerine, right?
That's correct.
In that definition that we went to, they are talking about when it's voluntary. You weren't required to match it, but for some reason you did. But once it becomes part of your federal budget, it's binding at that point. Meaning,
I just wanted to comment a little further. Pretty much my understanding is if it's not required, it then becomes a leverage instead of match. So
a big difference, Celerine. The match is required, meaning you absolutely have to be able to incur costs paid out of your own money to match the federal award. Different from leverage. Say you have a one-to-one match requirement, right? And for $100,000 grant, you were only able to match 80,000, right? That means you will not get the full 100. They will only award you 80 because that's what you were able to match. Leverage is different. Leverage is something that kind of supplements the grant, and it could be for any other not federal or non-federal source that you use for supplement the program. But be careful. We do have some programs that actually require you to meet some leverage. I think WIOA, Adult and Dislocated Worker, requires you to have some. So big, but big difference from the match though. Okay, so if it's a match, it's not a leverage, Celerine. Okay, that means you cannot include it as leverage because it was part of your agreement with the feds or with the grantor. Okay, very good question though. Yeah.
One more question.
Oh, one more.
This is from Alicia. She wants to know assistance listing versus CFDA. Do you know what's the effective date is on that change?
But I think assistance listing was already in the regulation as far back as 2017. I remember when I did that update, I was already talking about assistance listing.
It was called assistance
at that point, right? So it has been in place for a couple of years now. Even for the city, I think we're also late. I think in our single audit report, we're still referring to it as CFDA.
CFDA, yeah.
So, there's always that lag time when something gets updated and then folks to just kind of catch up with it. So if you are still looking CFDA, it should be, I think, in the same site where, or at least Google, where the listing is. It used to be cfda.gov, but let's check later to see. We could put it in the chat where you can find it now. I think it should be the same thing.
Okay.
Yeah.
Right.
So, thank you. And any more questions? Okay, quiz.
Quiz is live.
Oh, quiz is live. I'll give you, how many questions did I give them to make their lives
One
miserable?
question at a time, so.
Oh, so we're gonna do one question at a time, according to Kayum here, who's really in charge of the whole session. He said one question at a time. So let's do it together. The federal agency responsible for reviewing, negotiating, and approving your cost allocation plan or indirect cost proposal is called the what? Federal awarding agency, cognizant agency for audit, cognizant agency for indirect costs, or none of the above?
For indirect costs.
Cognizant
Yes,
agency.
okay.
Cognizant agency.
Cognizant agency for indirect costs. Very good.
Costs.
Thanks for listening. Okay.
Yeah.
Second question. Orders placed for property and services, contracts, and subawards made and similar transactions that require payment are called, you guys better get this.
Financial obligations.
Yeah, unliquidated financial obligation. We just talked about this. This is the unliquidated financial obligation. We have an obligation to pay. We're having problems with it. They don't see it.
Yeah.
Okay, that's fine. Number 3, information that can be used to distinguish or trace an individual's identity either alone or when combined with other personal or identifying information that is linked or linkable to a specific individual is called A, confidential personal ID, B, personally identifiable information, C, protected data, D, none of the above.
B.
B.
B. B.
Susan boy.
Yes, okay, they were listening. Number 4, an award provided by a pass-through entity to a subrecipient for the subrecipient to carry out part of a federal award received by the PTE is called A, agreement, B, award, C, subaward, D, contract. Yeah, C, subaward. 2 in the citation 2 CFR 200.208 stands for what? A, Part 2, B, Subpart 2, C, Title 2, D, Chapter 2, or E, Subtitle 2. Mary.
Oh, come on, that's too hard.
Okay. I'm trying to trick you. Title 2, okay? Title 2. It's the highest level. Title 2. 6, the codification of the general and permanent rules published in the Federal Register by the departments and agencies of the federal government is called, it's the Code of Federal Regulations. Okay. 7, the listing formerly known as CFDA. I'm trying to trick you. It's assistance listing. Somebody picked CFR citation number. I was trying to trick you there. Code of Federal Regulations number. No, it's B, assistance listing.
So, Catherine, why can't some of us see the quiz?
Yeah.
Yeah.
First and second day, I will try to maybe put it as a handout. How's that? That way you can kind of see.
Oh, okay.
Because we tested yesterday and we could all see. But of course, I'm sparing the picture and suddenly we cannot see the quiz.
Yeah, it's all my fault.
Number 8.
8, yes.
The time interval from the start date of a funded portion of an award to the end date of that funding portion, during which recipients are authorized to expend the funds awarded, including any funds carried forward or other decisions, is called A, grant period, B, budget period, C, period of performance, D, closeout period.
B, budget period.
Yeah, very good. Budget period, different from C, or period of performance. 9, a blank is a legal instrument by which a recipient or subrecipient purchases property or services needed to carry out the project or program under a federal award. A, contract, B, subaward, C, cooperative agreement, D, none of the above.
Contract.
A.
Yes, so good. That's so good. I'm happy. Last question. A payment that could not have been made or that was made in an incorrect amount under statutory, contractual, admin, or other legally applicable requirements is called A, question cost, B, disallowed cost, C, reversal of an accrual, D, improper payment.
Improper payment.
Payment.
Some people are saying disallowed cost.
No,
Please clarify.
Okay. So improper payment is the answer. Okay. Improper payment is actually disallowed cost. So those who answered B, they're also correct because at that time, it's already disallowed. You cannot charge the grant. Okay.
Yeah.
Disallowed cost just kind of results from audit findings, from fiscal monitoring review. So we can have the difference. But yeah, they're both at that point. Okay. Very good. Martha has a question.
Yes, I have a question. Because of these quizzes that a lot of us can't see in general, are you going to be able to, I know tomorrow you're going to give it a handout, but are you also going to give the handout that we're doing today?
I will.
Thank you.
I'm just not sure if I'm going to have time today, but something that I at least do in live trainings anyway is that I never give you the questions in advance, but I will give them to you after the conference.
Perfect.
You will have a list of the questions and the answers.
Okay, that's great. Thank you.
Okay. Yeah. So I'll do that. If not at the end of the conference, before I retire. Is that okay?
Please.
And I actually love that you want to see the quiz, right? That makes me feel good in a way. All right. So we will go straight to, unless you guys need a quick break, we will log off at 11. Keep going? Thumbs up if you keep going.
You should keep on going.
Let's keep going. General provisions, I think I will go through this quickly because I do want to concentrate more on see how I'm just kind of listing this section. I'm not really going through them. These are just the general basic guidelines, provisions that are for grants. So if you want to go look into, certain sections of this, please do so, but I will not go through them. Can you mute yourselves, guys? Now we muted you guys, okay? The good thing is where we have the ability to mute you. I heard some Tagalog speaking conversations there, but please be conscious about that. It's a big group. We are at 207 now, so, it's distracting. So Subpart C is just talking about requirements that the federal agencies need to have in place before they award. Okay, and why is that important for us, even if we're not a federal agency? Because most of your pass-through entities are adopting the same standards. I know we are. When you're applying for a grant, we do the same thing. Okay, so Subpart C. These are the different sections. I think I will focus on this one. Okay, federal awarding agencies and most pass-through entities, at least with us, we use the risk-based approach when evaluating your applications for a city award. The risk-based approach is what we do, or the federal agency, when you are applying for a grant. Please make note of that. This is what we are looking at. We're looking at your financial stability, whether you have the financial or performance systems in place and standards in place, your history of performance as far as running a federal grant. They are also looking, at least at EWDD, they are asking FMD, meaning us, if you have audit reports and findings that are outstanding, unresolved, or if you were uncooperative in any way, that might actually affect your application for a city contract. And if you have the ability to effectively implement requirements, that could also result from an audit finding where you don't have the financial management system, for example, to track the required financial information. How are you going to be able to run this grant that you are applying for? So know this, you are being evaluated on these factors before you even get the award, and definitely after you get the award. So in this case, Subpart C, we are talking of what's happening before you even get it. Okay, I don't know why I have marks on my screen, Kayum, but yeah, there's something there, but we can fix that later. Specific conditions, okay? Some of you have been subjected to this additional requirements. It means the federal awarding agency, or in this case, the pass-through entity, meaning the state or us, okay? Where we actually adjust the requirements of your federal award based on what we saw in our risk-based approach evaluation. Based on the criteria set forth in 206, that's just the slide that I just discussed, okay? Or if you have a history of non-compliance with the terms of your federal award or city contract. And your ability to meet expected performance goals. This is something that our program folks are looking at before they award you the grant, the city contract. And a responsibility determination of an applicant or recipient. Those are what you call specific conditions that are described in Subpart C, meaning before you get the award. But they are the same conditions that we are doing as well once you get the award. So remember specific conditions, because I'm going to be talking about this over and over in the next part of the presentation and tomorrow when we talk about audit, because some of you are on specific conditions, and for the rest of you, so that you can avoid being imposed specific conditions on. Okay. I expected questions on this one, but quiet. Okay.
Well, I have a question, Catherine. Well, you wanted a question, so
okay, fine. Go ahead, Mary.
I'm helping you out here.
You're right, Mary. Go ahead.
So, could a specific condition be a positive thing? Could the city say, "Oh, you don't have to comply with this because you have a history of compliance"? Or I'm just asking, or is it always a negative?
That would be specific awards, not specific conditions.
Okay, all right.
It's a good question, though. I mean, can an agency be awarded for good performance? So that really is a question for our program folks when they have exceeded their performance numbers. Are there incentives, for example, to award those agencies? I don't know, because I would only implement what's a rule. In this case, I'm afraid for the federal regulation, when you talk about specific conditions, it's something usually in the negative. That means there's a deficiency that we want to make sure that you correct before you get the award or while you're running our program.
Okay.
If it's while running our program, that probably means we will be monitoring you closely to make sure that those deficiencies are being addressed. And it becomes really tricky when it's during the award, because that means we're already at risk. We already gave you the award.
Yeah.
In spite of those deficiencies. So that's when you'll see closer monitoring either by your program folks, if it's a program issue, or your fiscal folks, if it's an internal control issue, if it's an audit finding that hasn't been resolved. Okay. You never want to be in specific conditions. And this is really not to punish agencies. I want to make this clear. This is not to punish. It's really to make sure that that deficiency is corrected.
So are the specific conditions written into the contract, or is it a special?
I mean, Mary, are you trying to impress me today? I mean, seriously. I know you went to my retirement. You went to my retirement party, so I'm already impressed and touched.
Okay.
But the question is it in the contract? Chances are, if it's before the award, the city of LA or whoever your pass-through entity is may decide to actually put that in your contract. When you have this, that means you're technically a high-risk agency. They may decide to put that in your contract. If it's something that happens during the award, say, for example, something that Edwin saw in the fiscal monitoring review, we don't usually amend the contract, but what we will do is we will send you a letter saying, Mary, I want to make sure you address this. From now on, effective immediately, please submit this, and this, or show me proof of this. And that can go on for a while until we know that you've corrected it. In this case, it's not in your contract, but we have a formal letter to you saying, Mary, you are on specific condition.
Gotcha. Okay, thank you.
So yeah, unfortunately, it means negative. When you are put on specific condition, that means technically that the city is actually trying to work with you. Okay, because what is the worst thing about a high-risk agency or an agency that we found to be deficient in so many things? The worst thing is we decide not to give you the award, right? Meaning you never got the money to run a program, and meaning you're not going to be able to serve who you wanted to serve, Or if you already have a contract, it can be as extreme as us recommending terminating the contract. We're saying we're not comfortable with this agency, it has financial stability issues, or they're refusing to work with us. My recommendation is I say we suspend or we terminate. You don't want to get that far, right? So when we start with specific condition, it's usually let's try to correct it while we can so we don't get that far. Okay? So what are the additional specific conditions that we may impose on you? We may actually say, you know, we don't want to suspend their privilege to get advance payment. Let's put them on reimbursement payment only. Okay. We can withhold authority to proceed to the next phase of your contract if there's phases in your contract. And this is what we do a lot. The next one, we require additional, more detailed financial reports. So some of you, we actually require from now on, effective immediately, with your expenditure reports, or at least quarterly, we need to see your general ledger. We need to see your payroll register. We need to see your cost allocation. Depending on what that deficiency is, we might just impose that on you, or we want to see your tax returns. We want to see that you've actually transmitted your payroll taxes. That we do a lot, hoping to correct it. That way it's considered a corrected, a resolved deficiency before it gets far worse. Okay. Or we may require additional project monitor. You may have a program monitor who may decide instead of going twice a year, may go to you every month. Okay. Or you may just need technical assistance, which I know Mary loves. She loves the one-on-one. So if that's the case, if that can be resolved through a one-on-one technical assistance kind of thing, that's also called a specific condition. Okay. Or we can establish additional prior approvals. Before you can spend anything, ask for your program monitor's approval. So those are the additional specific conditions. Okay. Was there a question? This is new, never contract with the enemy. It's not in part 200, but it's really for contracts that are over 50,000, I think, where you are not allowed to contract with an entity outside of the United States, where our armed forces engage in some kind of hostility, war, or whatever. You cannot contract using federal money with those organizations. This is new. It's called never contract with the enemy.
I love the titles that are being used.
That's what I said. I said, I love what's the for that never contract with the enemy?
I don't know. I think I think that was just your acronym or your title for now that you're leaving. That's what you're going to name it.
With the enemy. I thought it was.
Sorry, Catherine, but that was just too much.
Oh man, but yeah, remember that's a new one. Okay, if you're ever thinking about contracting with, if our armed forces are engaged in some hostility, you cannot contract with them, at least not with federal awards.
So is there a list somewhere of who the enemy is?
I don't know. That's a good question, though. I mean, how do you know that this organization is not engaged in providing supplies to whatever, right? Yeah. So that's a good question. So maybe, Mary, for your homework, you can find out if there's a list somewhere that we could share.
All right.
And I'm sure probably if that's the case, probably in SAMS.gov, the federal agency's database of who they do business with, you will probably not find that organization there.
All right. I'll look.
They're debarred from engaging with the federal government. But that's a good question. I don't know. Yeah.
We'll get you a gift card, Mary. Thank you.
Okay. So get back to us, Mary, this afternoon and find out if there's some list. So that way Donnie doesn't execute a contract with with the enemy. How's that? Okay. Subpart D, I have 10 minutes. Okay. I'm going to touch a little bit on this one. I want to stop at least at the procurement portion, and then we'll resume from there. Okay, post-federal, this means you already have the award. You have a grant from the state, the feds, or you have a contract with the city. Financial management standard, this is big. And I put a star here because for all you fiscal folks, I want you to put a star on this section 302, financial management, because this is what you are expected, what you are required. Meaning I should use the word must. Okay, you have to have a financial management system that allows you to do this. You are able to identify all accounts for all federal awards received, how much was expended, how much was obligated. You are able to identify which grant, what assistance listing, all that should be in your accounting records. Okay. I haven't circled it here because there's no way around this. If we find there's a weakness in your financial management system, that's specific conditions right there already. You know, I'm hearing, you know, bells and my antennas are going up when we see something like that. That means you have to have accurate, current, and complete disclosures of the financial results of each award or city contract. You are able to identify adequately the source and application of funds for federally funded activities or city awards, meaning your authorizations, your contracts, what's unobligated, expenditures, income, all that. Okay. So, and that's why for every award, ideally, you should really have a separate set of records for every award. Not multiple, you know, in one system, but if it's in one system, there has to be some coding there that separates one fund from another, one grant from another, because you will just drive an auditor crazy if they are not able to trace the transactions for our city contract in your accounting records. That's trouble right there. Okay, because usually what that means, we just might question everything because we can't trace it. We can't trace what belongs to the city and what belongs to the county or another agency. Okay, so fiscal folks, I hope your antennas are kind of going off in alarms if this is a weakness in your organization.
Johnny.
I just froze. Okay, hold on. Can they hear me?
Yes, we can hear you, but yeah.
I can see you, but my presentation stopped, right? Can you see it? No.
Yes, your presentation
you see
has
me?
stopped.
Yes.
You see
You look fabulous as
I
always.
don't know. My presentation stopped, so I'm gonna stop it here because we have to go to our departmental staff meeting. So at 12:45, guys, we will resume Part D, Subpart D of the regulations. Okay, so we will see you. Start logging at 12:40. That way we can kind of start. I'm giving you a very long lunch, so how's that? Okay, so we will see you at 12:40. Guys, thank you. All right, so we stopped here before lunch. I was talking about a financial management system and what you absolutely have to have in place. Before you even apply for an award, you have to have a financial management system that meets the standards of 200.302. Okay, if you missed the part of, well, you know what, let me talk about, let me stop right here. I know we sent out the link for the Zoom yesterday around 3:30. But if you missed it, and it's probably did not make it to that cutoff, but even as late as 7 o'clock last night, I was still letting people in. We tried to wait as long as we could yesterday because I know there were some late registrants. Some people contacted me, and of course, I'm conducting the training. I couldn't check my email, but I did give you a contact information in that invitation on who you should contact in FMD if you have any issues. Okay, so those who directly contacted me, I'm sorry if you just got the link now. And what else? We're going to postpone the quizzes. Before we did the virtual training, we actually tested it yesterday and it was working fine, but maybe that might be an individual setting for wherever you guys are. So what I'll do, I'll postpone the quizzes and then we'll have one tomorrow. Maybe that will be a good test of how much you remember if I do the quiz tomorrow, right? That way I have time to actually do a handout instead of the poll feature of Zoom where I'm losing some of you. And I certainly don't want that. I know you love the quizzes. So no quizzes today. Okay. What else? Housekeeping during lunch. So I hope you have coffees next to you. This is when it usually gets hard after lunch. This is when I actually like to walk around the room just to see who's kind of dozing off. I can do that in virtually, but so have coffee or soda next to you. So let's resume where we left off before lunch. I was talking about financial management. Please go through these bullets right here. If you don't have these things in place in your system, you might be in trouble. Okay, make sure you're able to track all your funding sources separately from everything else. Okay, if you have a grant from HUD, you have to track it separately from WIOA. Okay, they have to have their own set of books ideally, or at least some separate coding that allows you to track them. When the auditor comes to you, they will ask for your ledger for their specific city program. But second to the last bullet is one of the things that grant monitors like to ask me when they visit. Is, can I see your variance report, your budget against your expenditure report? They like to do that. Why? Because that tells them that you're monitoring your expenditures against what you're actually approved to spend it on. Okay, it's just good financial control practice. It also prevents you from having budget revisions at the last minute if you are tracking your budget versus your expenditures. You also have to have written procedures to implement the requirements of 305. We'll see what 305 is. You have to have an allowability of cost policy. You must have a written policy. Okay. In one of your handouts, I actually gave you a copy of our allowable cost policy. So if you guys want to look at it and see if it's, you know, if you want to copy it or use it as a template for your organization, if you don't have one, it's actually pretty good. It's pretty extensive. Internal controls. I won't go through this so much, but you all know what these are. You have to have effective internal controls to give us a reasonable assurance, or at least your awarding agency, that you're remaining accountable for the government money that was given to you. Okay. One of the things that we want to ask you is when we go to you is that internal control questionnaire, because we want to have a sense of what you have in place in your organization. The regulation says that this internal control should be in compliance with guidance in standards for internal control in the federal government. And I actually made you a copy of that framework, that internal control integrated framework by COSO. Attachment 1, it's in your handout, the very last page. Okay, and we're not going to go through examples of internal controls. By this time, you know what internal control is and what you have to have in place. Okay, you already know that. I mean, that's something we covered actually in previous training. This time, what I want to make sure we discuss is how do we make sure that you don't have findings, right? And then if you do have findings, that the expectation from you is to take prompt action when we see instances of non-compliance, when we have audit findings. And usually a grantor, at least in the federal agency, they're more forgiving. And by forgiving can mean they're usually more flexible if they see that in the resolution of your findings that you were promptly taking action to resolve whatever deficiency. Okay, the more you delay that, maybe the less flexible they will be as far as, you know, what resolution, what determination they're going to make at the end. That is very important for you guys to remember. Work with the fiscal monitors, work with the auditors. And then 305, federal payment. You guys have to make sure, Mary knows this, minimize the time elapsing between the transfer of funds from the treasury, in this case from the city, to actual disbursement, meaning you only ask for that cash when you're about to make a disbursement. And of course, in an ideal situation, that's workable, right? But I know we're delayed in, you know, reimbursements to you. I mean, I should tell you, half of the FMD staff positions are vacant right now. So there's an issue there. But let me just tell you what the regulations say, that there has to be, you minimize that time between you getting the funds and the actual disbursements. And why do you think that is? Unmute, so if you want to speak. No, no one wants to try. Because they don't want the taxpayers' money. Now I'm gonna call grants taxpayers' money sitting idle. If you didn't need it, don't ask for it. Because then it's sitting idle in your accounts when it could have been used for something, or at least that's how I interpret it. The regulations also say, okay, the next bullet, that non-federal entities must be paid in advance. Must. There's a condition there, though, that you must be able to demonstrate the willingness to maintain both written procedures to assure that the first bullet is happening. So just because you have an award from the city, do you actually have the privilege to get advance payments right away? Just because it's federal money? No.
No, you have to show some stuff.
Yeah. So the regulations say you should pay people in advance, right? Ideally, you don't want agencies to be putting up their own capital to pay for a program, because it impacts the program when you have people doing that. But before you do that, you have to be able to demonstrate that you're going to be able to account for that advance money. Okay, the way the city implemented that is requiring, and for the non-EWDD folks, I don't know what you have in place in city departments, but you might want to think about it. For EWDD, we have to have a special bank account agreement. And that's an agreement that was imposed by the city attorney for our agencies to have, meaning an agreement between our service providers and their bank where they are depositing the advance payments. Signed by both parties. One of the things that agreement says is that the city will have access to that account if for whatever reason we need to access the funds. So without that agreement, you can't be put on advance payment. And of course, that's assuming also that you don't have any findings that will make me, for example, uncomfortable to give you advance money. So there are certain conditions there, and that's really the condition of being able to give payments in advance only if you meet the specific conditions. And the NFE must disburse funds available from program income before requesting additional cash payments. Here's about the setting up of a separate bank account. Okay, the regulations is saying for you to receive advance payments, you are not required to have a separate account. Okay, the only condition is you must be able to account for the funds received, obligated, and expended in that account, but you don't necessarily have to create a new account for the funds if you're receiving advance payments. Okay. Advance payments of federal funds must be deposited and maintained in accounts. You must maintain an interest-bearing account, and you are allowed to keep up to 500 of that interest that you're earning in that account for admin expenses. I'm skipping now. For equipment, if you have any questions about how you need to account the inventory, the prior approval requirements, the disposition of something that you want to get rid of, please check with your program monitors. They are responsible for any equipment that you have purchased or that you plan to purchase. Procurement, okay, the fun stuff. For us at FMD, I'm gonna go. No, let's talk about the general procurement standards first. You must have documented procurement procedures. So one of the things that an auditor will ask you is, can I see your written policy on procurement? So if you don't have one, guess what? It's a finding. Because what does it say here? What's the first word in that bullet? Must. Okay, you must have and use the documented procurement procedures. That's in compliance with at least the regulations at the minimum. Okay, if you're pass-through entity, for example, the city has more restrictive requirements, then you have to meet that. Okay, but at the minimum, it needs to comply with 318, this regulation that we're looking at. You must maintain oversight to ensure that contractors perform in accordance with the terms and conditions and specifications of their contracts or purchase orders. So you make a contract, you are responsible for monitoring them. There's a problem with that contractor or subcontractor. Guess who we run after? I run after Mary. Okay, I don't run after your subcontractor you have a contract with. I go after Mary, the one that I have a contract with. Again, it says here, must maintain written standards of conduct covering conflicts of interest. Okay, must. Okay. So no employee in your organization must be engaged in procurement if he or she has a real or apparent conflict of interest. Okay. Okay. We are going to pause for a second. Our general manager, Carolyn Hall, is here. So I stop sharing.
We're having some technical difficulties here, but I'm good. I'm good. I can handle it from here. Thank you. Thank you. Thank you. I'm sorry. We have a weird camera view going on, so I might take myself off camera.
No.
Well, okay, I'll stay on camera, but we're having, as Catherine can attest to, I'm having some technical difficulties today. But first of all, let me just welcome everybody to what is going to, which has been already, I think, a fabulous financial management training program. I understand that we have, well, Catherine, can I just trouble you to let me know who's on the call right now?
I think we have about 200 people now. So we have the service providers. We also have invited some from other city departments, but mostly EWDD service providers.
This is such an important meeting because the work that you do is so important. And the only way that we can continue making sure that we can get you the funds that you so desperately need and deserve in a timely fashion is if we all understand the financial management policies and procedures, and we understand how our team looks at your books and looks at your organizations. And I know sometimes it seems fairly tedious, but Catherine's here to help us. Catherine and FMD actually, they make it all work, because without their abilities to make sure that we can report back clean findings and audits, we get less federal money, not more. And I know that sometimes as we go through these audit procedures, it can be tiring. I know myself, on the other side of it, when I was at LADC, we had to go through these processes, but because of Catherine's abilities to explain the financial management policies and procedures, we were able to do our job and do our jobs very effectively. I can't tell you how often, just in my job here as general manager at EWDD, I depend upon Catherine's expertise to keep us in a position where we have had, how many years, we have clean audits for how many years now, Catherine?
Clean audits?
Yes.
I'm not sure I can say we have clean audits.
Well, you keep us mostly out of trouble. I should have, you know, that's the rule. You should never ask a question you don't know the answer to. And I apologize for that. But we do work really, really closely with Catherine and your teams to make sure that you have the tools that you need to be successful. So thank you for taking the time to be on these management meetings. Thank you for working with us. Thank you for the work that you do. Again, it is so critical that we are able to make sure that you understand the policies and procedures as the federal government understands it. Maybe not the way we understand it, but the way the federal and state governments understand it. So thank you for your time. Thank you for your energy. And I'm going to stay on for a little bit, and I'm going to learn something for a few minutes.
Right. All right, Carolyn. There you go. So we were talking about general procurement standards, okay? No employee should be involved if there's an apparent or real conflict of interest. You may set standards for situations in which the financial interest is not substantial. Maybe it's just minimal. That needs to be addressed in your written policy. You must provide for disciplinary actions to be applied for violations of such standards by your employees and officers. So you must award the contracts only to responsible contractors possessing the ability to perform successfully under the terms of what you're looking for, okay? You should give consideration to such matters as contractor integrity, compliance with public policy, and their records of their past performances and their ability to comply, right? They have the financial and the technical resources to do what you're paying them for using government money. And this is where a lot of agencies get in trouble too, when they don't have records documenting that procurement. Okay, you need to have that in place. It's a must, okay, not a should. You must maintain records to document the history of that procurement. The records should include the rationale for the method of procurement. What did you do? Was it a micro purchase? What is a small purchase? Proposal? Selection of contract type. The reason for selection or why you rejected the application. The basis for the contract price. Okay, and it should be competitive. Okay, you must provide for full and open competition. I'm a little ahead of my, so examples where you might be trying to restrict the competition. I just listed them here. Okay, so try to avoid this. You must have written procedures for procurement transactions. These procedures must ensure that all solicitations are clear and accurate. Okay, you have to be, clear about what you're looking for. You have to identify all the requirements that they must fulfill in order to be accepted or evaluated for their proposal. Okay, nothing new here. Okay, but I'm just kind of emphasizing that point because we do get this finding a lot from some of you. Non-competitive procurements can only be awarded in accordance with 320, and we're going to go through that. There are different methods of procurement depending on the threshold of the contract that you're looking for. We're going to talk about informal procurement methods. Okay, when the value of the procurement or the property does not exceed the simplified acquisition threshold. So folks, remember this, okay? Remember the simplified acquisition threshold and what that amount is, because that's going to dictate what kind of procurement you're supposed to make, or a lower threshold established by an NFP. So for example, your pass-through entities, the City of LA, even if the regulations say that the SAT is 250, the City of LA might give you a threshold of what? 200 or 100. And then the same thing for you, for your subcontractors. Okay, and you'll find out later, because for example, if the threshold is 250 and you have a contractor that's for 300,000, can you imagine giving them a threshold of 250? That's too high. So you really need to adjust it based on, I would say, the funding. Okay. So let's start with the micro purchase threshold. That threshold is up to 10,000. Micro purchase threshold is up to 10,000. What the regulations say is that you should purchase equitably among qualified suppliers. You can pretty much just make phone calls and not to do a real full-on procurement if it's up to 10,000. So nothing new here. When the regulations came out, I think they started with 3,500, and then in 2017 they increased that to 10,000. Here's the new part, though. Our program monitors in the house, Tony, Donnie, Jackie. So are they?
Yes, it's Tony.
Yeah. Okay, so here's a new one. I checked our existing procurement policy to make sure if we updated it, and it looks like it's still based on the old one. So I'm showing you here what the regulations say about procurement now, and then we have to decide what to do, whether we want to just adopt what the UG says or lower that threshold. But in the regulation now, it says that the micro purchase threshold can be increased up to 50,000. Okay, if the non-federal entity would self-certify. The self-certification is on an annual basis, and you must maintain documentation. The self-certification must include a justification and clear identification of the threshold and supporting documentation. So this is something that you might want to adopt in our own policy if we do decide to allow this. Okay, the self-certification must have this information. A qualification as a low risk, so our high risk agencies would probably not allow them to do this. An annual internal institutional risk assessment. For public institutions, a higher threshold. So go back to your divisions, workforce and economic division, and see how you want to change our policy to this. Remember, non-federal entities, meaning us, we can actually have a lower threshold, but the regulations is up to 50 right now to self-certify. Okay, we can decide, let's allow them up to 20. Okay, and maybe for Mary, up to 10 only. I'm sorry, Mary, there's a question. Yes.
Yes.
Frank.
How does procurement vary from general funded contracts? How does procurement vary from general funded contracts?
I think the question is if your contract with the city is not federal money. Is that the question, Frank?
Yeah. Yes, that's the question.
Oh, Frank.
Hi.
Our Frank. So what we do with workforce, and of course Tony and Donnie or Jackie can correct me, we've adopted whatever's in the regulation, whether it's federal money or if it's a city funded program. So that way there's no confusion. Well, I can do this here because it's city funded, but I can't do it over there because it's federal. So I think for the most part, we're adopting what the regulations require. Now, do you want to provide flexibility for city-funded programs just because there's no federal monitoring? That's really our department's call. But I know for the most part, for most requirements, and I think even for procurement, we are actually using federal regulations, standards. Okay, so Tony, I know I looked at our procurement policy in the annual plan before the training, and I know it's not updated. So for the service providers, please, we don't have this updated yet. So that means your micro purchase threshold is still up to 10,000 until EWDD or the other city departments who are here decide how to adjust that threshold based on this new regulation. So, but for now, until that happens, your micro purchase threshold is 10,000. Clear? Yeah, Tony, I want you to nod. I'm looking at you.
So what we'll do is we'll discuss this with Gerardo and the staff to see what's the best methods, and also we're gonna discuss this with the state to see what their threshold is or what they're holding us accountable to.
Okay.
So then we can go ahead and move forward and if needed, modify the directive. If not, just remain the same.
Yeah, and then probably check with the city too. I know for city we do have our own city level procurement. So, as long as we're staying within the threshold, that's what's set in the uniform guidance, we're okay. It's just up to our call and how lower that threshold that we want to set for our own subrecipients. And here's the other regulation when they want to increase the micro purchase threshold above 50,000. In this case, the regulation says you need to go to your cognizant agency for indirect costs for approval. So now, in our case, it's our pass-through entities, the state. Yes, Tony, then we need to consult with the state. Will they allow us to do something like this? So really, it's kind of early because we haven't adopted it, but you folks need to talk. Okay?
Will do.
To go above 50,000, the regulations say you must submit a request with the requirements included in this section. So if you guys plan on going above 50, please consult this section of the uniform regulation where there's more information that might be available to do this. I just couldn't include everything in a slide. Okay, just know that it exists. Okay, it's an update of the regulation. The increase in threshold is valid until there is a change in status in which the justification was approved. Again, that's at the federal level, not at the city yet. You can do small purchase procedures. Price or rate quotations must be obtained from an adequate number of qualified sources. They didn't even tell you how many is adequate, right? It just says adequate. So for me, if I'm procuring for a CPA contract, for example, I need to have at least for me, 3, and I'll be in compliance. I think what they want to see is that you actually shopped around a little bit and not just, going to just one person. That's what they mean here. But just know that the uniform guidance did not state a number of what that adequate is. The simplified acquisition threshold is anything above the micro purchase threshold, whatever that is, 10,000 or 50 or above 50, up to 250. So when your contract is within that range, the NFE is responsible for determining an appropriate simplified acquisition threshold based on internal controls. I'll let you read that. When applicable, a lower simplified acquisition threshold used by the NFE must be authorized or not prohibited by the state. So this is talking about if we decide to make, Tony, if we decide to make that threshold lower. And I would think for us, I mean, our contracts are what, between $500,000 to $1 million. A threshold of 250 of not requiring some kind of procurement standard, I think is pretty high. So, I mean, I think our threshold should be low, but don't quote me on that one. I'm not in charge of that, okay? Just saying. Formal procurement methods when it's anything higher than 250 or whatever that SAT threshold is established by the NFE. For procurement this high, you have to do sealed bids. Okay. And these are the conditions to do sealed bids. Did I jump? Okay. Or you could do proposals, okay? Either a fixed price or a cost reimbursement type of contract. I think this is what we most do for us, the city, where the request for proposal is publicized, and we identify all the evaluation factors that we need to have for applicants to meet. Okay. Proposals must be solicited from an adequate number. Again, it says adequate, which leaves it up to us to determine what that is. From an adequate number of qualified applicants and considered to the maximum extent practical. You must have written method for conducting technical evaluations of proposals. We must have a written method for conducting technical evaluations. Do we have that? Okay, yeah, don't answer me. But I'm just curious. It says here, yes.
If I'm not mistaken, all of these procurement standards that the city imposes are delineated in our contracts, aren't they?
Tony, yeah, I'm thinking, yeah, it should be. Can somebody from program
Yes.
answer?
Yes.
Yeah.
That's what I thought. Okay.
And that's really what the ideal situation is. If it's a requirement for you, it should be in the contract, or at least in some kind of directive after the contract is executed. That's really how we make sure our service providers must comply. Okay, when we put it in writing like that. So I think it is. Go ahead, Edwin.
It's actually in Exhibit K of the contract. It's part of the contract as an exhibit.
There you go, Mary. You even have an exhibit number, exhibit letter. There you go. Thank you, Edwin.
That's because Edwin's so smart. He knows all these things. Thank you.
That's why he's my co-trainer. He probably knows more than I do.
Yeah. No, I was just assigned to look over it by Catherine.
Okay, Exhibit K, okay? For the other city departments, please look at your contract, so you need to know what those thresholds are for your procurement. If you don't know that now, look at your contract. If it doesn't say anything in your contract, check with your city department. Okay, or with your pass-through entity if it's not a city department, okay? Or you can do non-competitive procurement. I think this pretty much means sole source, okay? But you can only do this in these conditions. See, if it's a micro purchase, if it's below 10,000, you don't really need to do any kind of procurement. So you can do a non-competitive one if it's up to 10,000. Or the item or the service is only provided by a single source. Or to go through a proposal, it would mean that it would delay something of an emergency nature. Or if your grantor says it's okay, you don't have to do a procurement, you can contract with this agency, which I think the city rarely, we don't want to have any procurement issue with our grantors. So I think that's very rare. Or if after a solicitation of a number of sources, no one responds, or you only get a response from one person, okay, then you're okay to go sole source. Again, all this needs to be documented. So when Edwin asks you, well, why did you select this contractor? Mary should be able to provide all that documentation that what made you make that selection. We've beaten this subject so many times, and we still see it as a finding over and over again. This is just something that I like to just present there, the procurement clause. There's a general standard of what a procurement must meet. And then there are just different procurement methods, a different clause on what you need to do depending on the amount of the procurement that you're looking for or the contract that you're looking for. So for procurement folks, have this posted on your bulletin board or something. Subpart D, performance and financial monitoring. I have a question from.
The question is from Gian.
Gina?
Yeah, Gian. How do you view Amazon as a vendor?
The question is, how do you view Amazon as a vendor? I buy everything from Amazon. No. But it's one of the things that you check if it's competitive price compared to others. That's the best that I can respond to that one. If it's a micro purchase, you could probably get everything there. I probably would just document, okay, I checked Amazon and against Home Depot, and it's cheaper here. I'll probably just document that. And that's all you need to do if it's within the micro purchase threshold. Did I answer that question? Or maybe I should let Tony respond to that one.
Martha has a question.
Martha has a question.
Well, my question is, so can we use Amazon and compare their prices against other prices on Amazon? So say, for example, I want to buy pencils. And this vendor is selling them for $5, this vendor is selling them for $6.50, and this vendor is selling them for $4.50. Can I use that as a comparison? I'm just making it simple. But can I use that one location, but there's different vendors selling the same product?
Amazon, you actually have different vendors. I mean, you're looking for a product and they have different prices.
Yeah.
I think it's okay. Especially if it's just a micro purchase, but I will let our program folks jump in if you have anything to say about that. Meaning doing their search for, for procurement just within the Amazon site. Is that okay when you actually have different vendors in that site? But I think that actually benefits only one company, which is Amazon. So, if it's probably above that micro purchase threshold, I think I would like to see other attempt to look for other sources of where you might get that product. Anything to add, program monitors?
Catherine, this is Tony. I would agree with what you said. I would say that if you are going to do any type of procurement, we would prefer that you actually do your due diligence and show us a variety of vendors, not just use one singular vendor who might benefit off of this.
I have a question for Tony or Catherine or whoever. So can you take into account other features beyond price? For instance, during this pandemic, we were purchasing from vendors who would deliver because our office was closed. Sometimes that added to the price, but of course, that was a convenience that we needed because of the current circumstances. But there might be other instances where there's other features other than price. Can we take those into account? Can we, if we write a justification?
Do you want to take it, Tony?
Sure. Yes. So Mary, go ahead and just as long as you can justify it, and you can, just because we're in a in an unusual circumstance right now. So yes, just work with your monitor, and I'm pretty sure we will have no problem as long as it's documented.
Mary, this is where your writing skill gets tested on the justification.
Yeah.
Justify, especially in an emergency pandemic situation where you really don't have that much liberty and time to go shop around.
Yeah.
In this case, it's a perfect example. You needed it delivered right away. So aside from contract, the price, there's other factors affecting that decision. If you just document that and explain that, I would walk away. I personally would walk away.
Okay. Thank you.
Yeah. I don't know about Edwin. Edwin, would you walk away?
Yeah, I would walk away as long as Mary can, explain it very well.
No, I can.
Do we have questions from others? Because I'm hearing a lot from Mary, and I know you folks enjoy listening to Mary, but please do not hesitate to ask. If you don't want to speak, you can do chat or chat directly with any FMD staff, and we will read the question for you. If you don't want to, if you don't want me to pick on you like I pick on Mary. Is Tito here? Tito Matura? I'm like looking for him. Financial reporting, monitoring. We are responsible for the oversight of the operations of the federal award. Once we get that award, that's our responsibility, oversight over you guys. And the same thing for you if you subcontract. Okay. I'll skip the real property. Subrecipients. Okay, here's what defines what a subrecipient is. Sometimes we would have a proposal where, do we do a subrecipient or do we do a contractor? So this is where the regulation defines what a subrecipient is. They are responsible for determining eligibility. It has its performance measured in relation to whether the objectives of the federal programs is met. They make programmatic decisions. They're responsible for, again, like I told you guys earlier, the regulations will go with you if you are a subrecipient. A contractor, no, but a subrecipient, if you are a subrecipient, then you are subject to those regulations, whether it's federal regulation or the city contract provision, okay? And I'll let you read that last bullet, okay? So for the most part, the folks attending this conference should really be subrecipients, because contractors, all I can run to you after is whether you provided the service or you delivered the goods that I ordered from you, because that's your business, selling, okay, or providing service. The subrecipients, on the other hand, are most our service providers. I expect you to comply with these regulations because you are a subrecipient. Our contract with you is a subaward. It doesn't matter if I call it contract or agreement. It's a subaward as far as the federal regulation is concerned. Contractors for the purpose of obtaining goods and services, and these are just what, you know, defines it. I think we all know this. Unless you want me to discuss, I'll skip that. Ignore that. Ignore that. Change the slide for this page. That was just a note for me. Here's one good thing about indirect cost rate, okay? There's a change in applying for an indirect cost rate. As you know, if you have a federal cognizant agency, you need to negotiate with them. Meaning if you have a direct grant from them, okay, that means you don't have a pass-through entity. You have a grant that you directly got from the feds. You need to negotiate for an indirect cost rate with them, right? So that first bullet says, pass-through entity, we have to accept your federally negotiated indirect cost rate with your federal cognizant agency for indirect costs. Okay, so we won't bother you to submit a proposal to us if you have an agreement with them, or you don't have a direct relationship with them. You can then negotiate with us, which is what you guys do, right? You send a proposal to Edwin with the audited financial statements and all, and we will take it. If you have a city a contract with LA County, you then have to negotiate with LA County separately. Or if you have an award from housing separate from EWDD, you then have to negotiate with them. Well, now that has changed, which is what I've been, you know, hoping would happen in the federal regulation world. Is exactly what this change is, meaning we will be able to accept your indirect cost rate agreement with another pass-through entity. Did you guys understand that? We will be able to accept that now. So, for example, you have a contract with the city and you have a contract with the LA County. You don't have a direct grant with the Fed, so you don't have a federally approved indirect cost rate. You negotiated it with the county. The city now can decide, okay, let me just use what you negotiated with the county. I'll use that. You don't have to negotiate separately with me. That's what it says. That to me, that's a big relief. You don't know how many indirect cost proposals that other city departments have asked EWDD to review because they have to negotiate separately with their agency, who's also our agency. So make a note of this one. This is a change in the indirect cost rate regulation. Please tell me you're happy about that. I'm the only one who's happy. Okay. Because it released a lot of work.
I'm happy.
Yeah, who's that?
Mike, does that apply both ways, that others are required to accept a rate we negotiate with you?
If you have another federal award from another pass-through entity, let us know that you negotiated something with LA County, for example, or the state of California. The city will accept it. We will just ask for a copy of that proposal, maybe. We would still ask for a copy of it, but you don't have to have a separate negotiation. That's the beauty of this change.
So will the mayor's office accept the rate we negotiate with you?
Yes.
Yes?
Yes, they can.
Oh.
In fact, the mayor's office are the ones who usually ask us for, well, can you help us with this? They want to charge us indirect cost rate. And then I would usually say, well, no, you have to negotiate separately, right? Because I'm a separate city department. Now they can accept that.
Good, we'll have to call them.
I have a question. So
Nancy.
If you have a federally, hey, how are you?
That's
if
the baby.
You have an assigned federal rate, right? Because of an entity that or something that's tied to you. However, let's say you have a higher indirect rate that's approved by other county contracts. and we have support of that. Can that suffice?
Yeah, we will still have to review it, just to see.
Because you're going to have to do a comparison between the assigned federal rate we have, right?
Well, if you have here's the thing. If you have a federally approved rate, non-federal entities, pass-through entities must accept that. It only becomes an issue when you don't have a federally approved rate and you have rates with different pass-through entities. Now those pass-through entities can talk to each other, and they don't have to, and you don't have to have separate negotiations for each of them.
But there's contracts from county entities that assign us a cap rate that's way higher than what we have here, or even our federal rate, which is part of their contract that's given to us and other entities. So,
so that's probably one of the things that we're going to look at if we're going to accept that.
Yeah, because, and I'll just give you an example. So like if our federal rate, and I know we're capped either way here at 4%, but we have other entities that could give us 14 or 10. And we have that in written document, contracts and approved by the county, as written proof, right? So I guess it would be a matter of submitting that to you guys along with what we have on file as our assigned federal rate for you guys to interpret and then determine if it's something that can be negotiated, since other, maybe, and I'm talking about more than one entity is giving us a higher rate.
Yeah.
So Catherine, she's confusing admin cap with indirect costs.
Mary, I'm so proud of you.
Thanks, Mary.
Mary, because I was just going to say that. I know Nancy mentioned the cap rate. When you say 4%.
And that's a different situation.
I don't want to lose other service providers who are in this call who don't have that admin cap for WIOA. But the admin cap is separate from the indirect cost rate. Okay. In this case, for example, we would look at that 14% that you negotiated with the county, for example. Okay. And this is assuming you don't have a federal rate. This is the rate that you have with the county. We will look at it. And then we could decide if, we can probably adopt that, except that our contract, you can only charge this much on the admin portion of your indirect cost pool. Okay, that's where we'll probably be a little bit of negotiating, just because of the terms of WIOA, for example, is different from when they negotiated that indirect 14% with you. So a lot of things that may go on here. It's just that just keep in mind that at least the regulation now says this pass-through entities can talk to each other. I think that's a big relief. I've actually had a meeting with Controller's Office a long time ago to say, well, can this service providers just deal with the Controller's Office and not separately with all the other city departments? Because we did have some agencies who had multiple city departments and they were having trouble negotiating separately with each of this department. I want to see, can the controller take care of this? That didn't go anywhere, but this is a big relief right here. Just so you know.
Who on your team, and then because I know there's different entities on here, but who on your team would you say would be the best person to kind of get technical support for, like maybe a review or a second glance on maybe if you wanted to try and go into those types of proposed items?
Edwin.
Okay.
Edwin,
our friend Edwin. Okay, that sounds great.
Yeah.
Right, Edwin? Yeah.
Yes, ma'am. Okay, here's a question, Catherine, from Celerine of CRCD. He's asking if we will enforce the indirect admin and program distinction for a federally negotiated rate, because it doesn't include the breakdown of indirect costs, admin and program in the federally negotiated rate.
That's a question for me?
Yeah, I think I can answer that. We will be enforcing, of course, EWDD's and actually it's EDD's requirement for a separation of indirect admin and program distinction, and we will always ask for the separation of that cost in your proposal.
Even if you have a federally approved rate, we will ask for it, just because we have to look into the requirements now of WIOA, for example, or CDBG or whatever, who may have requirements about admin and program, because your indirect cost pool is really a composition, could be a composition of both admin and program. They don't necessarily be always admin. So that's the part that we're accepting your rate with the feds, okay? But we need to look at something too, to make sure we comply with this admin part of that regulation, separate from the indirect cost. So the answer is yes, we will ask for it, even if you have a federal approved rate.
There's another question, Catherine, from Marco.
Okay, Marco.
Does this apply for the minimum indirect cost as well?
Minimum meaning the de minimis?
De minimis, yes.
Yes. Hi. Well, if we are, you were suggesting before that we apply for the 10% minimis. So if I do have one already with a county, would this apply for the same thing with the federal indirect cost?
Yeah, so if you have a rate that you negotiated with the county, it's now your decision to say, well, Edwin, can we use the rate that I negotiated with the county?
Yeah.
Or if you decide, or you know what, for the city contract, I'm going to use the 10% de minimis cost rate. That's actually your call.
Oh, okay. So I can use that.
What we need to ask there is, I want to make sure that you actually have indirect cost pool. Even if you charge the 10% de minimis rate.
Right. It's actually 3% in our current contract now.
The purpose of the 10% is to relieve you from the burden of it.
Correct.
So as far as the federal is concerned, 10% minimum, I don't have to talk to you. Okay, I don't have to document it. But the question the city will ask you is, I want to make sure that you actually have indirect cost pool, indirect cost that you're charging to the different grants. Why do I even bother asking you that, even if you decide to do the 10% de minimis rate? Marco, can I put you on the spot?
Yeah. Well, you want to make sure that it won't be double dipping.
All right.
Yes, Marco is listening. Thank you, Marco. That's the purpose of it. We will accept the 10% de minimis rate if we have the assurance that you also did not charge this same indirect cost pool, that you're charging 10% de minimis rate to us, that you also did not charge that to HUD or to another city department. That's the reason. But if we have assurance that you did not double dip, we will take the 10% de minimis rate. That is really your call.
Oh, okay. That's fine.
Even if you actually, okay, if I look at it, if I really make a proposal, I might be able to just, request for a 5% rate. But that's what they're saying. At the minimum, they will allow you 10% de minimis rate. That's an allowance that they're giving non-federal entities as long as you are not double charging the federal government.
Correct.
Yeah.
Yes. That's good.
Or here's another change. Okay. If you don't have multiple cost objectives, before in previous regulations, if you want to charge indirect cost rate at all, you have to apply for a rate. This time the regulation is saying if you choose to just cost allocate, you can do it.
Got it.
I know. So that's a good one, but there are certain conditions where a cost allocation might not work. Okay, so I just want you to be aware of that. But if your organization is simple enough where it's just general and an admin in nature of what's in your direct cost pool, maybe you can just cost allocate. Forget about the indirect cost rate. So this is something that you have to look into your organization. Just know the options that are available to you.
So another question. So the ones that I had with the county that was agreed upon, the minimus, can I present that to you so I can get my city contract approved?
Well, if it's a 10% de minimis rate, all you have to tell us is that's what I want. Or are you saying what you provided to the county for them to approve that?
No, I was already approved with the county.
Okay. Then submit that to Edwin. I just want to make sure that we also answer our question. Whether there's double dipping or not. And I guess the other part is I want to make sure that that pass-through entity who gave you that, who approved that rate, actually did their due diligence.
Yes.
Of asking what they're supposed to ask. If I'm not satisfied with that, I may just ask, you know what, I know you have a rate with the county, but no, can you submit your proposal to me? We can still make that decision.
Got it. Okay, great. Thank you.
This section right here is talking about what a pass-through entity can do. Okay, just remember requirements for a pass-through entity, meaning mostly the city, the county, the state, those are pass-through, and you guys, if you subcontract. Yes.
Just one clarification. Even though they have a 10% de minimis, do they still require? Are they still required, to submit the separation of admin and program costs?
It's up to them. Because if they don't submit that separation, that entire 10% is admin.
Right. Okay.
So the only reason that we're asking our WIOA subrecipients or CDBG or whatever, depending on what your grantor, how your grantor defines what admin is, we're asking you to provide that breakdown because if we want to make sure that if there's an admin cap, an admin cost cap for your agencies, if there's anything at all in that indirect cost pool that you can classify as program so that it doesn't get capped on that admin cap rate. In WIOA, for example, it's 4%. Then it's really to your benefit. It's not to my benefit. It's just creating work for me to have to ask you to break it down, right? So if you want to be able to move some of your indirect costs as program, then do that analysis. Because otherwise, if you guys don't do that, then that full 10% is admin, as far as I'm concerned. It's your call, agencies, service providers. Okay, so some of you are kind of resisting that when we ask for that information. What we're doing there is really trying to help you because we know for many of your city contracts, you have a very low admin cap, very low. So some of you are probably eating your indirect costs with your own funds because you cannot charge it. But if there's anything at all that's programmed there, then let us know. It's to your benefit, not mine. Fair enough? Okay. Oh, did you like that lecture? Only because I hear a lot of resistance to us asking for that, when the purpose of us asking for that is really to help you. If you don't want to be bothered with that question, then it just all automatically means it's all admin and it's subject to the cap. All right. Another requirement is that you must permit your PTEs and auditors to have access to your records and financial statements as necessary. Okay, that's also in your contract. If we ask for certain records, you have to provide them. That's a condition of an award with the city. And ideally, I think those records should be local, city. So if you have any records in your centralized office in New York somewhere, that's a problem. But yeah, we need to have access to those when we ask for them. I don't have to explain to you why, but if it's anything that has to do with city contract or a federal award, I have the authority to ask for those records. We also need to evaluate the risk. You know how we were talking about the risk-based approach on pre-federal award, pre-award stage before. We also need to do that evaluation after we have given you the contract. That's what this bullet is talking about. We continue to evaluate you even if you've received the money. In fact, we actually do more of it now that we have given you the money. Okay, we could have said no when we knew you were a high risk, but once we give you that money, expect more monitoring from us if you were considered high risk and we eventually gave you the award. Consider imposing specific subaward conditions upon a subrecipient if appropriate. This one, specific conditions, we actually have a section on this. Remember in the previous section, I talked about what specific conditions, meaning adjustments to the federal award or city contract that we can impose on you. After we give you the award, depending on what we find on your reporting performance, your whatever it says in your financial report, what we find in our fiscal monitoring review, we can impose specific conditions on you to make sure that we correct that deficiency that we see. Okay.
Catherine? I'm sorry, the slide it's in the small little screen, so we're not able to see it in full.
I'm in presentation mode. Why is that?
Just to review what you're not seeing.
I can see it in full screen. You may have to zoom in and zoom out.
Yeah, I can see it.
Yeah, we can see it.
Okay. Because Cecilia, I'm actually in presentation mode, so it's full,
no problem for me.
Full screen to me. So it might be you, Cecilia, if you could check.
Tell her to change her view.
I was able to fix it. Thank you,
Okay.
Catherine.
Okay. For a moment there, I thought I was doing something wrong. Have I been presenting with the slides that too small for people to see? Okay. Specific conditions. What else? The monitoring of the subrecipient, that means Edwin, okay, and me and Steve, must include the review of financial and program. I think that's what that means. We must make sure that you take timely and appropriate action when we note some deficiencies detected through audits, on-site reviews, from your single audit, okay, from written confirmation from the subrecipient. We have the authority to do that. We will issue a management decision for any audit findings. Resolving audit findings specifically related to the sub-award. So here's what the regulation is also saying. We're not responsible for resolving cross-cutting findings. What does that mean? Anybody knows what that means? You have a contract with the city for your HUD money, right? You have another finding with the Department of Education that was noted in your single audit. It's not my responsibility to resolve that. I can only worry about my contract with you from my department. That's what that means. The pass-through entity is not responsible for resolving cross-cutting findings, meaning findings that are organization-wide. Okay, we could, especially if it impacts my program. For example, if you have any financial stability issue, I know that's organization-wide, but if I see that in a single audit, oh, I'm asking the question because it impacts my contract. Okay, it impacts the city program. We can also rely on the subrecipient's cognizant audit agency. What this means is we can rely on your single audit. Most of you are over $750,000 in city contracts. Most of you are subject to single audit. And that's why we follow up on the findings that you have in your single audit, because that's actually one of our responsibilities. We will have a separate single audit section tomorrow. Hannah, this list is long. We have a lot of responsibilities, Edwin. I'm on my fourth slide on this requirement already. Verify that every subrecipient is audited. Okay, this one is just talking about that you comply with. Subpart F is talking about the single audit. And remember, for EWDD service providers, and I don't know if housing does this or CIFD does this or CAO, whatever. For EWDD, once we find out that, for example, their single audit report was due March 31st, if we check the Federal Audit Clearinghouse and April 1st, the agency has not submitted, they are put on audit sanction. That means they cannot be reimbursed for anything. So that's what we do. We call that the audit sanction. And remember, that's a federal requirement. I don't have the authority to give you an extension to submit that single audit report on April 30th if it was due March 31st, because that's really a federal deadline, not a city deadline. Ideally, you will get reminders from us getting close to that deadline, but we haven't been able to do that with the staff that I have. But once you miss that deadline, just remember, guys, you are on audit sanction. You're not going to be able to be paid. Okay. The pass-through entity can also consider taking enforcement action against non-compliant subrecipients, as described in 339 and in program regulations. So there's a lot of authority or responsibilities of being a pass-through entity, because really the federal government gave it to you. So now you have to enforce everything. So if you are a pass-through entity, make sure you know 332. If you have a subcontractor, probably one of the questions we ask you is, did you monitor this agency? Let me see the monitoring report that you have for this subcontractor. Okay, did you do a risk-based approach when you contracted with this subcontractor? We will ask you those questions because as a pass-through entity, that's your responsibility. Okay.
Catherine.
There's a question.
Yes, there is a question, Catherine.
Question is, agencies under 750,000 still need to write to FMD regarding single audit. I will let Edwin or Steve take that.
We usually require a certification for those agencies below the threshold. Does that answer the question?
And that's nothing new. So, because remember, the 750 is not a contract award. Okay, the 750, those who are subject to single audit, is when you have expended federal money of $750,000 or more. So we don't know if you might have multiple federal programs. So if you don't meet that threshold, what we need from you, and this is not new, it's a certification from you saying, I have expended less than 750, and therefore I am not subject to the single audit. That's all you need to do. Although I think, Edwin, we can require programs.
Yeah, we additionally, we want them to give us the schedule of the federal award expenditures that's showing less than the threshold.
Did that answer your question? That's from Frank. You okay?
Well, could the letter just be sent and then the certificates, the schedule come later? Because some of the agencies just get general fund.
You can do that.
Okay. Okay, great. Thank you.
Okay.
All right. I want to finish the regulation before the afternoon break, because after the break, we will talk about budget. Okay, so I don't want to have a clean cutoff before we break. Hopefully I don't have, how many more slides do I have? I'm going to go quickly, okay? Records retention, 3 years, okay? From the date of the submission of the final expenditure report. Does the city require a longer period? What's in the contract?
I think it's 5 years.
It's 5.
Oh,
5.
okay.
And it's 5, actually, according to our internal auditor, it's 5 from the final audit resolution, not from the final expenditure report.
That's true. I mean, if there's an audit finding, for example, then that 3-year period kind of goes beyond. The regulations only says 3 years. I will leave it up to our program folks if they want to change that to keep the 5 or 3, but the regulation is 3 years. Okay, if there's any litigation, claim, or audit, and if those started before the expiration of the 3-year period, records must be maintained until all litigation claims or findings are resolved. So Mary, here's the answer to your question. If that finding occurred before that 3-year period expired, you are required to keep everything until everything's resolved, not from the point that it's resolved.
Oh, all right.
Yeah. So show them this. Now your pass-through entity might be more restrictive and say, no, I want to keep it for another 2 years. So have that discussion, but you at least know what the uniform guidance says.
Okay.
Or if you are notified to extend that retention for whatever reason, that the federal agency or your pass-through entities can do that.
It may be a university rule. I don't know.
Okay. Why are you asking me about a university rule then?
I don't know. I was just saying what I have been told.
Maybe Catherine's going to work for the university. You never know.
I don't know. My son's from UCLA. Maybe I'll see. Records for real property and equipment must be retained for 3 years after final disposition. So if you dispose of any equipment paid for by city funds or federal funds, you need to keep that for 3 years after you dispose of it. The question is, do we need to keep those records or documents in hard copies, or electronic copies are okay? Electronic copies are okay. Yeah. Yeah, let's save some trees. How's that? This one just talks about, your records for program income, your indirect cost rate proposals, how long do you keep them? Okay, so I won't go through them, but when that 3-year period starts is what this slide is talking about. Because I do want to break at 2:15. Remedies for non-compliance, when those specific conditions that we impose of you are not enough, and we try to have you submit additional reporting requirements, we gave you technical assistance, and still those did not work and did not correct the deficiency, we can impose what they call the remedies for non-compliance. What are those? Okay, if non-compliance cannot be remedied by those specific conditions, the pass-through entity may take one or more of these following actions. They can temporarily withhold cash payments to you guys. Okay. So this is something that we don't like to do. Give us additional reports so we can see before withholding it. chances are, if there's any withholding of your payment, it's not because of the specific condition. There's probably something else going on there, because we do refrain from getting to that point by trying to resolve it with additional documentation first. But that's also an option that we can do. Or we can disallow all or part of the cost that you're charging to us. We can suspend or terminate your contract. We can initiate suspension or debarment proceedings. These are all extreme that we don't want to get to that point, okay? Or you can be not considered for future projects. We can withhold further city awards for this contractor, or whatever remedies may be legally available, okay? So these are the extreme remedies. So every time we have a specific condition on you, let's make sure that we know whatever deficiency there at that stage, okay? And make sure it's resolved at that point, regardless of how long you are in specific conditions. So we don't get to this slide. So you don't get to this actions that I've just listed here, because these are extreme. You can actually lose a city contract because you did not resolve a deficiency that we noted, that we said you need to correct. Closeout, you all familiar with this? It's just meaning it's ending, and there's usually a closeout period. In your handouts, I actually gave you a copy of our financial closeout directive from fiscal year 2021. So for those city departments who don't usually issue closeout instructions to your service providers, you might want to look at that. It's pretty extensive. We cover indirect costs, accruals, obligations, and all that good stuff in that closeout directive. And I've attached this as one of your handouts because in preparation for closing 21-22, okay, that way you know what you need to be prepared to close the city contract for 21-22, and that's why it's one of your handouts. For the other city departments, again, it's for your information. See if you can make use of it. If you fail to complete the requirements of the closeout, for example, you did not submit your closeout report, we can actually proceed with closing it out based on information that's available to us, meaning probably your latest invoice that we have on file. We can close it based on that if you don't give us a closeout. We try to give extensions as much as we can, but at some point we have to close it.
It's the county contract that asks for closeouts 5 days after the.
I know it's really hard, but in fairness to the county, they're also flexible with giving us additional time when we need it. So if that deadline is too close, just reach out to FMD. In the last closeout period, I actually gave a number of extensions because we were able to get an extension from the county or the state. So those kinds of extensions that we usually pass on to you if it's challenging for you, but you need to reach out to us so we know. So we know that we have to wait for you when we prepare that grant closeout. We don't want to leave anything behind. So if you're getting hounded by your fiscal monitor, by Ben, by Keipp, or Glenn, asking for those closeout, it's because we're getting ready to close the grant and we don't want to leave you behind.
So Glenn, I need an extension.
The extensions are approved by Catherine.
Oh, Catherine, I need an extension.
So the other city departments, I don't know how flexible you guys get with closing out your programs, but here's a new thing on the regulation. You know how the feds, if you have a direct grant from the feds, they require you to close within 90 days? Direct, okay, direct grant. They've actually increased that to 120 days. Now, the question is, if you don't have a direct grant, what deadline is your pass-through entity going to give to you? That's where we kind of get into, it's too tight because the Fed's actually giving you 120 days. But for the state might give me only 20 days. And therefore, Mary, I will only give you 15 days. That's really what drives the closeout deadline. Who do I report to and how much time is that pass-through entity giving me? But at least at the highest level, it's 120 days. That's a change. It used to be 90 days.
After she's satisfied the answer.
If an extension is requested, that one?
Yeah, if it's question, how much time would that be? And you just talked about it. So.
Okay. If an extension is requested, how much time extension would that be? It depends on how much extension I can afford to give you based on my deadline to the grantor. Okay. And Keipp just said, you just answered that question, but I wanted to repeat it again. It's different for every grant. Usually for the state, you know, those federal grants, we have more leeway. But when it's a local grant, like the county or South Bay WIB or whatever, they usually have tighter deadlines, and therefore I can't give you so much. Okay, but just know that we are trying to be as accommodating as possible, because you know the closeout of a fiscal year takes time. You don't usually close a fiscal year in 5 days, right? For the city, you know, it's August and we're still not closed, right? So for those situations, Rovi, for example, would have to find out ways on how we can close our grant, knowing that the city has not closed its books. That means we accrue, we estimate if we have to. That way I can make sure that we get reimbursed for expenditures for that fiscal year that we're trying to close. All right. All financial obligations incurred under the federal award must be liquidated no later than the closeout deadline. I think this is wrong. You can tell the feds that I said that that's wrong. Why do you think I said that's wrong? What's a financial obligation? It could still be an unliquidated part of your contract, right? And remember, you can only charge what you expended up to the end of your contract. So if that contract ended 6/30, you can only charge expenditures that you incurred through 6/30. A financial obligation is really could be the balance of your contract that you did not spend. At the very least, I think this bullet is confusing. To me, I caught that right away. That financial obligation, does that mean unliquidated financial obligations? Because if that's the case, then you really cannot charge the city contract because the expenditure did not occur by 6/30.
Right.
So I think what they're talking about here, and I think they should clarify it, the only thing that you must liquidate by the closeout deadline would be this.
Yeah.
God, Mary, very good, Mary. I'm so proud of you. Meaning only your accrued expenditures. If by 6/30 you haven't made the payment, it's still an accrual. You need to pay those accruals by the time you submit the closeout to us.
Right.
That's usually not something that we can see because we're relying on what you're telling us. And that's why there's that schedule of accrual that we require as part of the closeout, and then an update on that a few weeks from there. That's really what we're trying to do to find out is, did you actually liquidate? Did you actually make a payment on those accruals? Because sometimes I can understand accruals might include some estimates. So if that estimate is overstated, for example, and yet we paid you, guess what? What's going to happen, Mary?
We have to give it back.
Exactly. You have to give it back. I want it back.
Yeah.
That's really the purpose of that, because you did not spend it.
On the other hand, if the bill is more than you estimated, you aren't going to give us any more.
The question is now, if you understated, right?
Yes.
And you had some accruals that you did not report to Catherine, do I pay you?
No.
The answer is, if I can still afford to revise that closeout to include what Mary missed, I will revise it so that I can actually ask for money to pay Mary for that understatement. So it really depends on, did I already close it with the grantor?
Oh, right.
Okay? If I close it with a grantor, I'm sorry, Mary, it's too late. If it's a city-funded program, like summer youth employment, where it's a city program, there I have more flexibility. I'll say, go ahead, Mark. Go ahead, Cecil. Go ahead, Nancy. Send me a revised report. That's fine. But once we close it with the grantor, then I think you're on your own, Mary.
Amanda raised your question. Amanda?
Amanda?
Yes, I had a question for an organization with a federally negotiated indirect rate, and it's initially that provisional, and then there's a final, and the final is revised, in one direction or the other, like what role that would play during closeout.
We actually have a slide on that one tomorrow, but to answer your question, say you closed it and at that time it's a provisional rate. Now, that provisional rate becomes final at a later time. If that final rate is lower, that means what? We overpaid you, right? That means they have to adjust the expenditure based on that lower final rate. That means you have to run after the money. You have to give it back. Now, on the other hand, this is where Mary loves to hear this. If the final rate is actually over than the provisional, that means I underpaid you. But if we close that contract, chances are I can no longer pay you for that difference. Again, it will all depend where we are on the closeout of that grant. If it's still open, then okay, I'll say, Martha, go ahead and revise your expenditure report. to show the final rate that it's higher, and maybe we'll pay you. The other situation is where we have already reported the savings and they've been reprogrammed to the next fiscal year. That means that money's gone and I cannot pay you. So there's a number of factors there that's coming in, whether we can pay you or not for that underpayment. Okay, but the bottom line is, once that provisional rate becomes finalized, you need to follow that final rate. If it means adjusting what you've billed to the city, you need to adjust. It just depends on whether you're going to be paid or not. Okay. Did I answer your question, Amanda?
Yes, thank you.
Okay.
Hi, Catherine. This is Donnie. Really quick, do you have any guidance on the closeout for the CARES Act?
The CARES Act was really granted to CAO. I think they have an email to us now about the closeout. But because it's a direct grant from the Treasury, I'm assuming their deadline is within 120 days. From December 31st. But I have to check on their closeout instructions, because for anything that we gave to our work source for LA Community Care Corps, for example, we'll rely on how much time the CAO would give us so that they can then report to the state. I think I saw an email on that one. So chances are for LA Community Care Corps, they have until December 31st. Our closeout might be probably around the end of January.
Can FMD help us with the closeout directive for that?
Yes, okay. Yeah. It will probably be the same as what we've issued, except the deadline. And for CARES Act, there's also a provision on indirect costs that we might include there, just because the CARES Act money does not allow application of an indirect cost rate, but you can still charge indirect costs by charging them as direct. And we'll go into that later on. That way you can actually get reimbursed for some of your indirect cost pool that may have been spent directly on CARES Act. Okay, so they're not completely saying you just can't use a rate. Okay.
Thank you.
If you have any refund that's due back to the city, you must return those promptly. Don't wait for Glenn to run after you. It must be actually attached to your contract if you already know. Post-closeout adjustments. So even after you've closed the contract, okay, the city, the closeout does not affect any of the following. We still have the right to disallow anything, to recover funds from you if there's some disallowed cost that was determined as a result of a later audit or review. So just because you close the contract with us does not mean Edwin cannot tell you, Mary, you need to return this money. Okay. It does not change the requirement for the NFE to any funds, okay, due as a result of, so maybe you got a refund from one of your contractors, they gave you a discount. Okay, or your indirect cost rate is actually lower. Okay, even if we close, you need to return those funds to your grantor. We still have the ability to make financial adjustments to previously closed award. Okay, such as resolving indirect cost payments. So don't think that a closeout is just the end of everything that you're dealing with your grantor. They may actually still reach out to you or any audit requirements. The closeout does not affect any of the following: property management and disposition requirements. Those are still in place. Records retention, okay, the 3-year period after you close, if there's no audit or litigation issue. Okay, cost principles, guys. This is the talk about what costs are not allowable. That's what we're going to concentrate on rather than the allowable ones. These are the factors that determine if cost is allowable. All this necessary and reasonable. They conform to any limitations. So if you have any admin cost limitation, for example, you cannot exceed that. They're consistent with your policies and procedures, and they're accorded consistent treatment in accordance with GAAP. Okay. Just go through this list because this is what's going to determine if it's allowable or not. Note this: they should be adequately documented. I don't care how reasonable or how necessary that cost was. If you cannot provide the documentation to the fiscal monitors, it's going to get disallowed. And they should have been incurred during the approved budget period. Okay. We'll talk about direct and indirect tomorrow. I want to go through the list of items. Okay. What's not allowed for federal grants? The one in red. Tequila. You guys are doing incentive, but not allowed, okay? No.
That's maybe employee morale.
I don't care how you justify it, it's not okay, right? Do not charge us for those. Alumni activities, not allowed. Bad debts. Commencement and convocation cost. Conferences, okay? If you are going to host a workshop, a training conference, what types of costs when you're hosting those are allowable? When you're the sponsor or host, the rental of the facility, okay? This might happen a lot at Goodwill, I would think. The speaker's fees, okay? Cost of meals and refreshments, local transportation, and other items incidental to such award. This is the only place in the regulation where it's the cost of food is allowed. Anywhere else, it's not. Okay, so if you are having a meeting with your employees and you want to motivate them and you serve pizza, do not charge me. But if you are hosting a conference and you have to provide snacks to those attending, this is the only place where you can actually justify charging a federal grant program food. And maybe you can charge, for example, the food program where that's really the scope of what the program is. That may be okay for those. WIOA is a workforce grant. So serving food is never the purpose of the program. Even if you're providing it as an incentive or whatever for youth, for example, it's not allowed. Okay, so be careful when you have food expenses. Chances are it's not going to be okay. Yes, who was that?
I have a question about that. This is Marisela. I thought that the only time that was allowed food purchases via conference is when it is part of the rental fee, where you can't bring food in. It's after a certain amount of hours, and the only way to eat is if you buy from the facility itself.
And that's where we need to be careful. The regulation is saying if the workshop is to provide technical assistance, it still has to be reasonable. In fact, I had the same understanding when we were providing food for our earlier conferences for you guys, where we were actually paying for the snacks that we were giving you. So it turns out if it's for technical assistance at all, if it's for dissemination of information related to the grant, you may charge cost of meals, but it has to be reasonable. Okay. So tread carefully. Maybe for the Workforce Development Board, that full breakfast, I don't think would be reasonable under the regulations. If it's part of the rental facility anyway, right? Then it's okay, because whether they serve food or not, you're going to be charged, right? Then that's okay. If that's the case, it's really part of what the requirement is. But the other question is, if that's what's increasing the cost of renting that facility, maybe you should go to another facility. Yeah, so I would be careful serving full meals, snacks maybe. If I'm holding down Mary for a full day, I need to give him some Snickers or something, So, so before we were actually paying for those, okay? Just be careful though when it comes to food. Okay, why did I go back to cost of identifying.
So is there a budget, cost per budget, a budget per cost, for example, for food? Every budget has a certain amount allocated for food.
Because it's not allowable, I doubt your program monitors will approve a budget for food. Maybe if you have a line item for conferences, workshops, that's where it's going to come in, but a separate budget for food, be careful. Okay. If you're sending employees to out-of-town conferences, or if you have attendees that are coming from out of town, the cost of identifying available dependent care in the area is allowable. It's the federal government's attempt to be family friendly. But remember, they're only allowing the cost of looking for what dependent care resources available, not the cost of the care. Okay, it's just, I just want to be clear with that. So you must exercise discretion and judgment in ensuring that conference costs are appropriate, necessary, and managed in a manner that minimizes the cost to the federal award. Okay, if you wouldn't pay for it with your own money, don't charge the grant. So just be careful, okay? I'm not saying it's completely not allowed, but just be reasonable and prudent with that decision when you go to a facility where food is required. Contingency provisions allowable, but with certain conditions. Go check the regulation about this. Contributions and donations not allowed. You cannot use federal money to contribute or donate to some charity, no. Legal fees. Depreciation is okay. Employee health and welfare costs is okay. Entertainment. I see this a lot for youth programs. Okay, sometimes you give them incentives or you take them to a concert or go to Knott's Berry Farm, for example, as part of a youth activity. If it's anything at all that's entertainment, it's not allowed. You give them incentive for something else, but not entertainment. And the Department of Labor issued a TGL where it doesn't matter if it's for youth or incentive. If it's entertainment, do not charge WIOA youth. So be careful. Okay, so not even for youth programs. Fines, penalties, damages, and other settlements, not allowed. Fundraising with conditions. Okay. General costs of government, like the city of LA, we cannot charge them the time or city council, that kind of thing. Idle facilities, if you have some idle space that you've been charging that you're not using, it's allowable, but conditions, there's a limit. At a certain time, you need to get rid of that space if you're not going to use it for the program. Interest with conditions, lobbying, not allowed. Losses and other awards and contracts, not allowed. Organization costs, not allowed. Pre-award, there are certain grants that would actually allow this. Costs that you incur before a program starts, not everybody. So you need to know what the condition is for your program. Scholarships and student aid costs with conditions. Student activity costs, not allowed. These are okay. And that ends our presentation for today, guys. Any questions? Did you get
question, Catherine?
Okay, I wasn't hearing. Am I by myself here now? Okay, hold on. Let me go back to. Go ahead. There's a question from Maria. Yeah, Maria.
Yeah. So I want to, can you give us an example of the employee health and welfare costs? Would that be like if an employee wants to join the gym and we reimburse them once a year, let's say $120? Is that allowable?
I had always wished that city would pay for my gym fee.
I think like providing a facility for like exercises of personnel, that would, and the expenses of maintaining it, that would be allowable.
I think if it's part of your fringe benefit, maybe, and it's available to everybody, not to specific employees, I think it's okay. But if I were the auditor, I would probably be looking at the terms of that, as long as there's some kind of restrictions or only a 24-hour fitness, or you're not going to, what's that expensive gym? Those kinds of things. Probably something for the program monitor to look at if they are charging us for employee welfare. It's almost similar to morale cost. They've removed that. That used to be liable and now it's not. So just be careful when you're charging those. Talk to your program monitor. I say we need to look at the details of that benefit to make sure that it's available to everybody, it's applied consistently, and it's not excessive. Yeah. Okay.
Thank you.
Question, Alicia.
Alicia?
Hi, sorry, it's off topic, but I just was wondering what time is break tomorrow? I'm wondering if I can schedule for another meeting.
I do plan to give you guys a break around 10:30 maybe, and then lunch break at 12. We come back at 1, and then a break at 2:30. Maybe. Okay. Yeah, so around that time. But that's really driven by how much participation, how much questions I get. And that's why I didn't set a time, because I don't want to be pressured by that. If there's anything that you miss, Alicia, just reach out to anyone in my team, and we will certainly keep you, up to date on what you may have missed because you have to attend the meeting. But tell them you have to attend Catherine Bondoc's training.
I will. That's most important.
All right. Anything else, guys? Yeah.
Catherine, I think there is one more question from Nancy.
Nancy has a lot of questions, Nancy. Nancy, what do you mean by student activity cost?
Yeah, because you listed them and it was highlighted in red. It said that was not an allowable thing, and you said student activity cost.
Those will be more like university type of activities. Maybe Mary could help me.
Yes. So at UCLA, we have a group of student activities and they receive some money. Each of them, you know, have a little budget that they get from admission fees, I think. Or there may be a staff person that oversees all those student activities. There's actually a student activity facility where those those clubs and activities are housed. So that's what I'm assuming they mean by.
I think so. Yeah, I think so. Meaning university, college type of cost that you provide to students.
So, okay, I just wanted to get clarification on that because I know that we would cover certain fees for students, or I know we cover like books for college and things like that.
I think those are okay when it's like a part of a supportive program, maybe where you
services. Yeah, so support services
for books or tuition for a participant, that type of thing.
So student activities would be anything that's maybe like an extracurricular type of thing that is like being put on by the college. Was that what it's kind of falling under?
You're on mute, Mary.
It doesn't apply to us. We're not colleges. So our participants are not students. They're not our students.
Yeah.
It may be a student at a college, but it's not talking about the kind of stuff we do. It's talking about.
Yeah, I don't think this applies to you guys because you're not educational institutions.
Yeah.
Oh, okay. Okay, that clarifies everything. Just because we know we pay out on so many things that are college related, that's what I thought it fell under.
So that's different. That's different from the youth participants and what they need as a supporting program activity. Those are okay. Yeah.
Okay, then that's fine. That's what I wanted to get clarification.
Okay.
I had a question about gift cards, and I can ask it tomorrow if you'd rather, Catherine.
Go ahead. We'll see.
Somebody told us that we weren't allowed to give like Target gift cards or Amazon gift cards because those entities sold food, and so it was possible for food to be purchased. Is that correct?
The answer to that is if the gift card is supposed to be an incentive, then it's okay because they've earned that and they could use it for gas or whatever. The cost of the gift card is allowable. Where they spend it is no longer your issue because they've earned that incentive. It becomes an issue when the gift card is supposed to be a supportive service. When they're supposed to use it for gas or whatever, that's when it becomes an issue. Okay. Is food an allowable supporting activity for WIOA? No, I don't think so because it's not allowable in the grant. In fact, Department of Labor never issued this, but they said absolutely for WIOA.
No,
not used for food. Even when we attend conferences for Department of Labor, they don't. They give us coffee. Pretty much.
So
pretty much.
That leads to another question. I know we can't buy food for WIOA, but what about the LA Youth at Work programs?
County, is it allowed? Tony, did they just abandon me already? Frank is still here.
You know, it depends on what grant. They never said yes or no. So for general fund, I would say it's allowed, and for county, the county, I do recall them saying limited as part of the PET. Yeah. So I have to go back, and they talked about limited based on a PET activity. I think they even went down to like the per person cost.
Okay.
So that's a big maybe for the county funds. And also regarding the allowability of the gift cards, yeah, I think we were told the same thing, is even an incentive is restricted because of the entertainment component or the food component. So if we can get some clarification on that, and I support that as incentive, if it makes it easier.
Let me look for that. They actually have a directive on that guidance where entertainment, I think, is where they address it. The Department of Labor went back and forth, and I think I never even saw one where they talk about specifically about food. I never saw it, but for entertainment, they did.
And the only reason I bring it up, of course, it's always a question when we start talking about, how to engage young people and stuff. But we had these public hearings recently that the department and Lisa Salazar's new department co-sponsored, and we heard there were two public hearings. where we were hearing from youth. And of course, when they asked these young people how to engage youth, they said food was the number one thing. How do you get kids to come to the program? Food. How do you get kids to attend workshops? Food. So, and you know,
and in fact, Mary, when that first rule came out, that's really where I heard a lot of uproar, really, on the youth programs. You want to keep up the kids engaged. We have to feed them. So I agree completely with you. I'm just saying the regulation or the Department of Labor, I don't think even issued a clarification on that one. So even up to this point, we're still hanging on food. We're still going back and forth. To me, it's allowable, but I don't make the regulations, Mary. So
no, I understand. I'm just sharing with you.
Yeah, I know. And so just be very careful because it's a workforce program. Just use the WIOA money for training related stuff and then use another funding source, maybe a non-federal one for food. And you can still do that. Just don't use federal money. That way you don't run into trouble later because the regulation specifically states that.
That's all of our money is federal money.
Well, do what I do. I pay for it from my own pocket. How's that?
Yeah, well, that's what we do. That's exactly what we do.
Going forward, we could ask for the grantors to include it in the budget, and maybe at the grant writing process, we can ask for it. Because I know Kendra got it allowed on a grant, and I think that was before the changes. But we can always ask our monitors, go back if they could allow it as we get these grants.
Yeah, and I'm sure you guys will be the perfect folks to provide the justification if it's absolutely needed to keep the kids off the streets, right? Yeah, I perfectly agree. But before you actually spend a lot of money, I say get some clarification or at least get some prior approval from your monitor so you don't end up eating up the cost later and document it. If it's a phone call, follow it up with an email. I mean, I always think that kind of saves you from a lot of trouble later on. For tricky, things like this. Okay. What about grocery gift cards? That is an entertainment. It's food. Grocery gift cards, again, if it's provided as an incentive, I think it's okay. If it's when it becomes a supportive service, that it becomes not okay. Yeah. Anything else? Can we have the recorded version of the training after the second day? Yes, we will provide you the link. That means you'll never forget me, right? We'll provide the link to the training, right, Kayum? There's going to be a link to this. We will postpone the quiz for tomorrow. So that's your uniform guidance, guys. The subpart F, like I said earlier, I will discuss tomorrow, that last section, because it's related to audit. Do you have any questions before we go on break? Okay, then I will see you. It's 2:23. We give you 15 minutes, okay? Bye, guys.